Now, when you talk about your time of supply, what is the purpose of time of supply? What is the objective of time of supply? To find out the time when you're liable to pay tax. Your liability to pay tax is determined by time of supply. Without finding out time of supply, you will never find due date of payment and due date of return filing. Without finding out your time of supply, you will never find what is the due date of payment. So time of supply is required for your due date of payment. If time of supply for a supply is April month, due date of payment is normally on or before 20th of May. If time of supply is July month, due date of payment is on or before 20th of time of supply is July month. So time of your due date of payment is on or before July. Time of supply is July. So due date of payment is 20th of August. 20th of August. If time of supply is Jan, due date of payment is on or before 20th of February. So that is the objective of time of supply. Now time of supply is discussed in two sections. Section 12, time of supply for goods, and section 13, time of supply for services. And in both the sections, it is split into 5 parts. Time of supply for FCM, time of supply for RCM, time of supply for your voucher supply, time of supply for residual cases, time of supply for interest, late fees for delayed payment of consideration. When you talk about time of supply for FCM and RCM, it is separate. It is very much separate. Answers are different for goods and answer is different for services. When you talk about time of supply for voucher supply, residual cases, or interest late fees or penalty on delayed payment of consideration, whether it is goods or whether it is services, it is the same. Sections are different. Section 12 for time of supply for goods, section 13 for time of supply for services, but answer is the same. Here section is different, even answer is different for FCM and RCM. Now when you talk about time of supply for your FCM scenario, time of supply for your FCM scenario, you need to understand one thing. First, you have to find due date of invoice. There are 2 steps involved. Step number 1, you cannot directly find out time of supply. Step number 1, you have to find out due date of invoice. Step number 2, you can find out time of supply. So first you have to find out due date of invoice, which is given under section 31. Then you have to find out time of supply, which is given under section 12 for goods and section 13 for services. So the problem with FCM is whether the question is asking you about due date of invoice or not. If it is an FCM case, you have to work out first due date of invoice, then you have to find out time of supply. You cannot directly find out time of supply. Step number 1 is due date of invoice. Step number 2 is time of supply. Now when you talk about step number 1, due date of invoice for goods, normally for goods, we'll take normal scenarios for goods. This is actually part of your document chapter. We are taking here because step number 1 is due date of invoice. If supply involves movement of goods, if there is supply and movement, there is supply of goods and goods are also moving out, then you have to raise invoice. On or before removal. If supply does not involve movement of goods, there is supply of goods, but the goods are lying there itself. There is no movement. That can happen in rare cases. There is supply of goods, but there is no. Supposing I have sold this entire instrument to ICI, but all these items are lying here. Possible? This entire equipment set, I am selling it to ICI. There is supply of goods. Is there any movement? No. So it is on or before delivery, constructive delivery. Constructive, which means when I'm handing over it, I'm giving all the passwords, etc. I'm handing over them. On or before delivery, constructive delivery. When I'm handing over all these items to them, including the passwords, etc. etc. Clear? Clear? This is a normal due date of invoice for goods. If you look at these normal scenarios carefully, there's no breathing time. Goods sector, no breathing time. Immediately. Supply of goods, movement of goods, on or before removal. Supply of goods, no movement of goods, on or before delivery. On or before delivery. Immediately. They are talking about instant invoice. Instant invoice. Immediately. Now, when you talk about service sector, there are certain special scenarios. We are not seeing special scenarios because we are not interested in seeing due date of invoice. Our interest is in seeing time of supply. So we are seeing general scenarios. All these other special scenarios are touched in your documentation chapter. Now for service sector, normal scenarios. Due date of invoice for your service. Normal case, 30 days from supply date. After the end of supply, you have 30 days. After the completion of service, you have 30 days. Breathing time or no breathing time? You do have breathing time. Service sector are always treated with caution. Always government have slight partiality for service sector throughout GST. You'll find a partiality for service sector. Now, for banking sector and insurance sector. For banking sector and insurance sector, banking sector will always include banks, financial institution, non-banking financial company. This 30 days is changed to 45 days. Breathing time is there? More breathing time. There is more breathing time. There's more breathing time. Are there special scenarios for service sector also? Yes. We have only seen the general categories. Goods sector, general category. Service sector, general category. Special categories to be touched in your documentation chapter. Now, this is the first step, finding out due date of invoice. Finding out due date of invoice. When you're finding out due date of invoice, be it for goods or be it for services. What is the due date of invoice? What is step number 1? What is your step number 1? Due date of invoice. For goods, it is on or before removal or on or before delivery. Correct? If there is removal, on or before removal. If there is no removal, on or before delivery. Constructed delivery. When effectively ownership is given. For service sector, normally 30 days. Banking sector or insurance sector, 45 days. That is step number 1. Correct? Now, it will lead to only 2 possible scenarios. What are the 2 possible scenarios? So, when you talk about your step number 2, which is time of supply, there are only 2 possible scenarios. You have given invoice in time, you have not given invoice in time. But here, you need to understand that when you talk about goods sector, answer is separate for regular scheme dealer and answer is separate for composition scheme dealer. But for service sector, whether it is regular scheme or composition scheme, answer is the same. Answer is the same. For goods sector, there are 2 sets of answer in goods sector. If it is regular scheme, you have to ask a simple question. Whether invoice was given in time or invoice was given after time. Invoice given in time, invoice was given after time. Invoice was given in time, invoice was given after time. In all the situations, you have to ask a basic question. You have found out due date of invoice. Question will give you actual date of invoice. Compare both. See whether invoice was given on time or invoice was given late. If invoice is given in time, so now we are seeing what? Now we are evaluating your goods sector, regular scheme, invoice given in time. If invoice is given in time, it is actual date of invoice. If invoice is not given in time, again you're talking about goods sector, regular scheme, invoice not given in time. Invoice not given in time. It is due date of invoice. Due date of invoice. What about composition scheme dealer? If at all you're talking about goods sector, but you're under composition scheme, invoice given in time, it is actual date of invoice same or date of receipt of payment, whichever is earlier. If invoice is not given in time, goods sector, composition scheme, invoice not given in time, it is due date of invoice or date of receipt of payment, whichever is earlier. Clear? Clear? In simple language, for goods sector regular scheme, receipt of payment is not even considered. Whether you receive in advance or receive at the time of supply or receive after supply, receipt of payment is not at all considered. Receipt of payment is not at all considered. Your payments are not considered. When you have received, the payment is not at all considered. But the same is considered when you're talking about composition scheme. Now, if it is for service sector, if it is for service sector, whether it is regular scheme or composition scheme, if invoice is given in time, actual date of invoice or date of receipt of payment, whichever is earlier. If it is service sector, regular scheme or composition scheme, invoice is not given in time, then it's not due date of invoice. It is date of completion of service. Here a commonly made mistake is students will take due date of invoice because that will be part of the first answer. You'll be finding out that first. But here it is not due date of invoice, it is date of completion of service or provision of service or date of receipt of payment, whichever is earlier. Simple analysis. So are we guys very clear with this understanding? Goods sector, 2 answers. Service sector, only 1 answer. Goods sector answer is separate for regular scheme, answer is separate for composition scheme. Service sector, whether it is regular scheme or composition scheme, same answer. Payment is always considered. In which area payment is not considered? Goods sector, regular scheme, payment is not allowed. Payment is not invoice given in time, actual date of invoice, invoice not given in time, due date of invoice. Goods sector, composition scheme, payment is considered. Invoice given in time, actual date of invoice or date of receipt of payment, which was earlier, not given in time, invoice not given in time, due date of invoice or date of receipt of payment, which was earlier. Service sector, payment is considered. Invoice given in time, actual date of invoice or date of receipt of payment, whichever is earlier. Invoice not given in time. Invoice not given in time. It is not due date of invoice. It is not due date of invoice. It is date of completion of service or date of receipt of payment, whichever is earlier. Are you guys clear with this understanding? Are we guys clear with this understanding? And you need to always understand that if you get a question, whether it is for FCM or RCM, where payment is received in 2 installment, work it out as 2 separate questions. Work it out as 2 separate. Now, 2 important points or notes I will tell you about payment. When I tell receipt of payment means receipt of payment in books of accounts or receipt of payment in bank account. It is whichever is earlier. If there are 2 different dates, one in your books of accounts and one in your bank statement, you will take whichever is earlier. But if I tell receipt of payment and receipt of payment is in multiple installments. Multiple installments. Say for example 3 installments. Now this has to be worked out 3 times as 3 separate questions. Now it is not whichever is earlier. The total value of the contract is 5 lakhs. You have received 1 lakh, then 2 lakhs, then final 2 lakhs. So you treat them as 3 separate questions. You treat them as 3 separate and apply the same formula. Is the difference clear? If the question gives you only one receipt, say the amount involved is 5 lakhs and you have received 5 lakhs, there is one date in book, say 10th of January, and one date in bank statement 12th of January. You will take? So there's only one answer. But if I tell the contract value is 5 lakhs, you have received it separately in 3 installments. Say first you have received 1 lakh on a separate date. That will be in books and bank, whichever earlier you can take. Then 2 lakhs separately. There again it will be books and bank, whichever earlier take it. Then again 2 lakhs. Again there will be books and bank, whichever earlier. But you have to work out this 3 times separately for 1 lakh. Treat it as a separate question. 2 lakhs, treat it as a separate question. Last 2 lakhs, treat it as a separate question. And this is true. This is true both for your FCM cases and RCM cases. If you get payments in multiple installment, do not treat it as same question. Treat it as multiple questions and work out separately. Apply the formulas independently. Treat it as different scenarios. If you treat it as one question, you'll end up making mistake. Treat it as separate questions, work it out separately. You'll get it very clear, separate answers. Are you guys clear with this understanding? That is all about your FCM, time of supply for FCM, step 1, step 2. Step 1, step 2. Are you guys clear with this understanding? Are you guys clear with this understanding? Now there is a relaxation given. This point we have missed out. Now we are seeing there's a relaxation given at supplier's option. If the advance amount is up to 1000 rupees. If the advance amount is up to 1000 rupees against invoice already raised. 2 conditions. If you have received an advance which is up to 1000 rupees and it is not a normal advance, it is an advance along with old invoice. You are making payment for one invoice, along with that payment you have paid an advance up to 1000. Then time of supply shall be invoice date. You will ignore receipt of payment. Even if you are talking about service sector, even if you are talking about goods sector composition scheme. Because payment is considered in goods sector composition scheme and service sector. But you'll ignore receipt of payment. When? For small advances. For small advances. What is that small advances? 1000 rupees. And people confuse here. They think that for all small advances, this point is applicable. No. If you are making the payment to an academy or institute, say 500 rupees advance, time of supply will be 2 separate answers. You will consider that advance payment separately. Though it is less than 1000, you will treat separately. You will consider receipt of payment. Why? It is not along with earlier invoice. It is not along with. Then what are they talking about? They are talking about change problem. You go to Jio service station or you go to Jio center. You see your billing for a month which tells that you have to pay 1000 rupees plus 180, 1180. You pay him 1200. There is 20 rupees advance you paid because of change, because the opposite person tells that we don't have change. Can we adjust this in next billing cycle? Can we adjust this amount in the next? That advance. Got it? Did you pay 20 rupees advance by choice or by force? It was change issue. It was not by your choice. It was not by your. choice. That was change issue. He did not have change of 180 rupees and he did not have change of 20 rupees. Are you guys clear with this understanding? So what are the two criteria for ignoring receipt of payment? You ignore that receipt of payment even for goods sector composition scheme, even for service sector. One, you're talking about advance up to small advances, advance up to, but that's not the only criteria. Second, that advance up to 1000 rupees is paid not by choice, not for booking your seat. It is paid along with earlier invoice because of change issue. Because of the opposite person tells that you have paid me 1200 and invoice shows 1180. I don't have a change of 20 rupees. Can we adjust this 20 rupees in the next billing cycle, which means can we treat this 20 rupees as advance? Correct? They are telling that ignore this advance. Ignore this advance. Time of supply will be the next invoice date. You forget about receipt of payment, it will be the next invoice date. Are you clear with this understanding? Are you guys clear with this understanding? Whether this point is relevant for goods sector regular scheme. Whether this point is relevant for goods sector regular scheme. This point is not at all relevant for goods sector. This point is not at all relevant for goods sector. By default, you ignore. Under any scenario, you don't even consider receipt of payment. Therefore, you don't even consider advances. So this point is relevant for whom? This point is more relevant for whom? For goods sector composition scheme, where you consider the payment, or service sector regular scheme or composition scheme, where you consider the payment. That point is relevant only in that particular area. So that is about time of supply for FCM. Now time of supply for RCM. Time of supply for RCM. It is just ulta of FCM. In time of supply for FCM, how many situations were there for goods sector? 2. Regular scheme and service sector. It is your ulta. For goods, there is only one situation. For service, there are 2. For service, there are 2. Time of supply FCM, goods have 2 scenarios and service has got 1 scenario. Time of supply RCM, goods have 1 scenario, service have got 2 scenarios. Service have got, and unlike time of supply for FCM, where you have to work out in 2 steps. First step is, what is the first step in time of supply for FCM? What is the first step? Louder. Due date of invoice. Second step is time of supply under FCM. Here directly find out time of supply under RCM. There are no 2 steps. There is only 1 step. For goods sector. For goods sector, what is the time of supply? RCM means you are looking from the eyes of whom? RCM. By default, the moment I tell RCM, you are seeing the entire story from whose eyes? So, date of receipt of goods or date of making the payment. Now, not receiving, date of making the payment, or 31 days from the invoice of supplier. He may not give GST invoice, but he may give some invoice. 31 days from invoice of supplier. Earliest of above. So, you will be getting all this information in the question. When you have received the goods, when you have made the payment, or 31 days from document of supplier. That document is not GST invoice, it is a normal invoice without GST. It is a normal invoice without document date of supplier, whichever is, that is the time of supply. Right, supposing date of receipt of goods is 10th April, making the payment is 15th May, and 31 days from invoice of the supplier. Invoice of the supplier is given on 1st April. 31 days from invoice of the supplier will be 31 days from invoice of the supplier will be what date? In April will have balance 29 days. First date is not counted. So it will be 2nd May. 2nd May. Which is earlier? 10th April. 10th. So you'll have 3 dates. 10th April, 15th May, 2nd May. Which will you select? 10th April. Whichever is earlier. Whichever is. If I tell time of supply is April month, what is the due date of payment? Time of supply is 10th of April. What is the due date of payment? On or before 20th of May. On or before 20th of. Clear? Clear? Now, what about service sector? Service sector, general case, it's very similar to goods. In services, you cannot have receipt of services. It's difficult to find when you have received it. Correct? Intangible. It's difficult to find when you have received. So remove that. What is the other part? Date of payment is there. 31 days becomes 61 days from document date of supplier. So it is very similar to time of supply under RCM for goods. There it is date of receipt of goods. Here date of receipt of service is not relevant. There it is 31 days. Here it is. So what is the final answer? Date of payment or 61 days from the document date of supplier, whichever is earlier. Whichever is earlier. Right. Now, service sector has 2 scenarios. Goods, 1 scenario seen. Service, general scenario seen. It has got a special scenario. What is that special scenario? Special scenario, you have to remember it in this way. It is nothing but importation of services from associated enterprises. Roughly from related person. Associated enterprises is taken from your section 92B of Income Tax Act. It is roughly equal to related person. Importation of services from associated enterprises. Roughly it is nothing but related person. Then your time of supply is date of payment. Same. Correct. The first part remains but 61 days from the document date of supplier, they don't believe associated enterprise will ever share invoice. So what they tell? Entry in books of accounts of the recipient. I would have passed an expenses entry in books of accounts. Expenses entry in books of accounts. Whichever is earlier. What is the problem with associated enterprises? They strongly believe that invoice may not be shared, payment may not be made. And by the way, when they talk about payment is always payment in books or payment in bank. Just now we have discussed common points for FCM and RCM. So then what is this entry? Again in books. This is expenses entry in books of accounts. If I were to break this formula into the minute part, it is payment in books or payment in bank or expenses in books. Before making the payment, you'll pass an expenses entry in books of accounts. Before making any payment, you'll pass expenses in journal entry in books of accounts. Expense journal in books of accounts, whichever is earlier. Whichever is earlier. So here it is. When I tell payment, it means payment in books or payment in bank or expenses entry in books of accounts, whichever is earlier. What is the difference that you see in general case and special case? General case, what is the time of supply for services under RCM? Payment in books or payment in bank? Payment in books or payment in? So this payment remains the same, correct? This payment remains the same in payment in your books of accounts or payment in your bank statement, whichever is earlier. But what is the other difference? What is the main difference that you see? Payment date or 61 days from document date of supply, whichever is earlier. Here it is payment date or expenses entry in books of accounts, whichever is earlier. Right, now a commonly made mistake. RCM contains about 20 list of services and about 8-9 list of goods in section 9.3. Right, for goods it is around 8-9 items in goods, 9 items to be very specific, and in services it is almost about 20 items in services. Section 9.3 category. Section 9.3 category. Now understand that out of that, one is importation of service. And that importation of service, people confuse that it is always under special category. No. When it is in special category? Only if it is importation of services from associated enterprises. Your general category will include importation of services from unrelated person. All the other RCM, including importation of services from unrelated person, will always come in general category. So out of 20 cases for service sector, approximately 19 will always come in general category. That 20th is importation of service. Importation will also come in general category to its normal importation. If it is importation from, only that will come in. Now, what is a commonly made mistake? The moment we see importation of services, our emotion comes out. Okay, it is special category. It is date of payment or date of expenses entry in books of accounts of the recipient, whichever is earlier. Incorrect. And question will also give all these unnecessary data. Importation of services also comes in general category. Out of about 20 cases of RCM for services, 19 will always be covered in general category. 20th, which is importation of service, that will also be covered in general category, but only if importation of services from associated enterprises, that is related person, only that is covered in, only that area is covered in special category. Are you guys clear with this understanding? Are you guys clear with this understanding? All you have to do is now remember this formula, apply it by seeing question, just application, mere application. You'll have the dates, mere application, and important points which are required for FCM and RCM. If payment is made in multiple installments, treated as separate questions. Treated as separate questions. That payment made in multiple installment will not be relevant in which scenario? It is always relevant. Payment is always relevant in goods, RCM scenario, even if it is for goods. Payment is relevant in RCM cases, both for goods and services. Even for goods, payment is relevant. No exception. Payment is not relevant in which scenario? If it is FCM, goods, regular scheme. Now that we have seen both FCM, RCM, payment is not relevant where? No, don't tell goods, regular scheme. Then you are missing FCM, RCM. It is not relevant in FCM, goods, regular scheme. It should be FCM case, goods sector, regular scheme, payment is everywhere else, payment is relevant. Payment is relevant. Now, what is the beauty of all the other three cases? The answer is same for goods sector or service sector. Goods sector or, there's no different answer for goods sector and service sector. Section is different. For goods, section 12, services, section 13. But answer is same. Answer is same. Voucher supply. What is voucher supply? Supposing Tata Limited gives vouchers to all their employees and tell that this Diwali we are not giving you gifts, we are giving you vouchers so that you can go to Big Bazaar and use the vouchers, go to Pizza Hut and use the vouchers. Obviously, Tata company would have paid advance to Big Bazaar and advance to Pizza Hut. Who are the suppliers? Big Bazaar and Pizza Hut. Recipient, Tata Limited. Recipient, employees are enjoying the benefit. There are two supplies. Big Bazaar, Pizza Hut to Tata Limited. Tata Limited to employees. And for both of them, time of supply is same. Big Bazaar, Pizza Hut to Tata Limited will always be attracting GST. Tata Limited to employees may or may not. If ITC is taken, GST will attract. If it IT is not, ITC is not taken. If the gift value is up to 50,000 per employee per financial year, no GST. If it is more than that, got that? So the main focus is on whom? Big Bazaar to Tata Limited, Pizza Hut to Tata Limited. Obviously, the same time of supply will be for Tata Limited to employees, but it may be supply, it may not be supply. But what is the clear-cut supply? Big Bazaar to Tata Limited, Pizza Hut to. So when I have paid advance, I will pay advances to Big Bazaar and Pizza Hut and get the vouchers. Then I'll distribute the vouchers as Tata Limited to my employees. Do you think that employees will use the vouchers same time? Few employees immediately. Supposing I'm giving the vouchers in December month, few employees will go in December month, few will go in Jan, few will go in Feb, few will go in March. Supposing March is the last date. Correct? Different employees will go at different point of time. Different employees will go and use the vouchers at different point of time. Now, what is the difference between Big Bazaar case and Pizza Hut case? In Big Bazaar case, supply is not identifiable at the time of issuance of voucher. My employee will purchase what item at Big Bazaar is not known to me. So they cannot put tax. Supposing vouchers are given in which month? December month. Vouchers are given in, few employees are using in December, few in Jan, few in Feb, few in March. Now, when the Big Bazaar has given the vouchers to Tata Limited, and when Tata Limited has given it to employees in December month. But which employee are going to purchase which item at Big Bazaar is known to Big Bazaar? No. Big Bazaar deals with multiple items having multiple rates. Few items 5%, few items 12%, few items 18%, few items 0. Correct? Employee category 1 may purchase items attracting 5. 2 may purchase items attracting 12. So on. And by the way, what is voucher? Voucher is nothing but money equivalent. When my employees are having that voucher, it acts like money. It acts like money. Why? It is an instrument which creates an obligation for Big Bazaar or Pizza Hut to accept it as a consideration. To accept it as a consideration. Instead of money, treat that voucher as money because already advance payment is made by Tata Limited. And that voucher will have the goods and services to be supplied. What goods and services you can take from Big Bazaar will be mentioned. It will have also the potential supplies. I can give one common voucher for Big Bazaar and Pizza Hut. Right? And there will be terms and conditions also mentioned. Correct? What is the last date of the validity? In Big Bazaar, you can purchase all the goods except 1, 2, 3. Except they can give few list of items that you cannot purchase using the voucher. Got that? Now, when you talk about Big Bazaar, the problem is supply is not identifiable in December. When vouchers are issued in December, Big Bazaar does not know which employee of Tata Limited will purchase what item. Correct? So what is the time of supply for them? To make it easier, they tell the time of supply is date of redemption of voucher. Date of employee 1 using the voucher in December month, answer will be December. Employee 2 using the voucher in Jan month, answer will be Jan. Employee 3 using the voucher in Feb month, answer will be Feb. Employee 4 using the voucher in March month, answer will be, there will be one answer or multiple answers. There will be one answer or multiple answers. There will be multiple answers. And when you redeem it, Big Bazaar actually know what items you have purchased, so it is easier for them to put the rate. Correct? What about Pizza Hut? Supply is identifiable at the time of issuance of voucher. No, sir, Pizza Hut will not know whether I am going to have pizza or garlic bread or Pepsi, whatever it is. All these items will have the same rate. All these items will have the same rate. Correct? So, when Pizza Hut has given the vouchers in December month, Tata Limited has paid the advance in December month. Pizza Hut clearly knows that these employees of Tata Limited can only have food in my place and the rate is same. Rate is? So, what will be the time of supply? Date of? When is the voucher issued? Whether employee 1 uses it in December, employee 2 uses it in Jan, employee 3 uses it in Feb, employee 4 uses it in March. Forget about everything. For all the employees, there will be one answer, which is December month. There will be only one answer, single answer. Date of issuance of voucher. Date of issuance of voucher. When government clearly knows that the rate is clear, they tell that pay immediately. When government understands the difficulty of Big Bazaar, because Big Bazaar does not know which employee will purchase which item, which rate, then government understands the difficulty of Big Bazaar and tells that, okay, you don't pay now because you don't know what amount to pay. You pay it at the time of redemption. Pay it at the time of. So when supply is identifiable at the time of issuance of voucher itself, when it is very clear that the rate is going to be so and so, what is the answer? What is the time of supply? Date of. Now employees redeeming the voucher is not allowed. They may redeem at different point of time, but GST will be paid entirely in the month of. Time of supply is December. Payment will be on or before 20th of Jan. On or before 20th of Jan. One answer or multiple answer? One answer. Issuance of voucher. When supply is not identifiable, Big Bazaar has got the advance from Tata Limited in December month and issued the voucher, but employees are using it at different point of time and Big Bazaar does not know which employee, what item, what rate. Then it is date of redemption of voucher. So you'll have multiple answers. Few employees December, few Jan, Feb, etc. etc. One answer or multiple answers? One answer or multiple answers? Here. Done. It's done. Right. So time of supply for FCM, different for goods, different for services, 2 step. Done. Time of supply for RCM, different for goods, different for services, but only one step. Time of supply for voucher supply, scenarios evaluated. Now time of supply in residual cases. They always use polished language. So actually residual case is nothing but fraud case. No books of accounts. No books of accounts. Where periodical return has to be filed. When I tell periodical return has to be filed, it means you don't have books of accounts, no records. You don't have records, but you are registered. No records, but unfortunately, for some reasons, you are registered. No records, but you are registered. You have to file your periodical returns. Any other case, you don't have records, also you're extremely intelligent. You're pakka fraud person. You don't want to have a trial. How a thief is always caught? By having a trial. Correct. He is leaving some proofs, evidences. Now this person tells, anyways, I am doing fraud. Why should I go and get registered and show that I am here? I will not at all show my evidence itself. Now understand, if you are a normal fraud person or small fraud person, then time of supply is due date of filing that return. Using best judgment, they will find that supply would have been made at so and so point of time. Best judgment. They will find that supply was made at so and so point of time. Due date of filing of return. And if you're a big fraud person, pakka, trained, well-trained fraud person, no records, no registration. You're not required to file any periodical returns. It is actual date of payment of tax. It is actual date of whenever you're paying, that is the time of supply. And if you read it again and again, you'll find that you will never ever pay interest. Why? You might have supplied 5-6 years back, but your time of supply is only when you're making the payment. And when you're making the payment, supposing it is April of 2024, that is the due date, that is the time of supply. When you find time of supply is April, your due date of payment is 20th May, which means you have made the payment before. So your time of supply is actual date of payment. Supposing you're making the payment in April 24. If that is the time of supply, if I tell time of supply is April 24th, what is the due date of payment? If I tell time of supply, forget about all these complicated points. If I tell time of supply is April 24th, April 2024, what is your due date of payment? 20th? When you have made the payment? Because your time of supply itself was when you are making the payment. When you have made the payment? When you have made the payment? Did you make the payment before your due date of payment? You'll never have interest. This poor fellow. No records, but untrained fraud person. Untrained, small fraud person. You'll always find big villains, small villains. Who are to die first? Who are to die first? Small villains gone. They have made supply 3-4 years back. Supposing this supply pertains to, look at the irony, this supply pertains to somewhere, the supply pertains to January 2020, just before COVID. Due date of return filing is 20th February 2024. So this becomes your time of supply. This becomes your, if this is your time of supply, what is your due date of payment? 20th February 2020. What is your due date of payment? 20th March 2020. When you are actually making the payment? Somewhere in April 2000. You will end up paying interest or no? Big interest. Big interest. This extreme fraud person also made that supply in Jan 20. But for this person, time of supply is when he is making the payment April 2024. And this means due date of payment is 20th May 2024. He will never ever. That is the implication. Obviously, it is not asked and all. If you understand, if you want to know the implication, small villains, finished. Pay tax with huge interest. Big villains, you pay tax. Obviously, penalty will be there and all. But you pay tax, no interest. This goes with the saying, something is better than nothing. Because this would be the final thing in your mind. So why is a big villain means penalization should have been more. They don't have any trial. If you don't tell time of supply, they will never ever make the payment. So better get tax at least. You're not getting interest, but better get tax at least. If you don't tell time of supply, even tax will be gone. Something is better than nothing. So this is a classic example of that saying, something is better than nothing. Right? If you don't find or don't give time of supply for this big fraud person or intelligent fraud person or well-trained fraud person, forget about interest. You will even miss the tax. You will find it difficult even to collect tax because there is no time of supply. If you don't have no supply, if you don't have time of supply, there is no due date of payment. If there is no due date of payment, this well-trained fraud person will tell, yes, I will pay. Don't ask me when. If you don't have time of supply, this well-trained fraud person will tell, I will pay. Don't ask me when. I will pay when I want. I will pay when I want. So that is the scenario. Okay, forget about all the complication. For your exam, just remember. Small fraud person, big fraud person. No records registered, small fraud person. No records not registered, big fraud person. No records but registered, small fraud person. Time of supply is due date of filing of return. Time of supply itself is due date of filing of return. So if supply happened in Jan, time of supply is 20th of Feb. Time of supply is 20th of Feb. Due date of payment is 20th of March. And for big fraud person, no records, no registration. Time of supply is actual date of payment. So you will never end up getting any interest. Right. And finally, time of supply for interest. What interest? Interest, penalty, late fees on delayed payment of consideration. Delayed payment of consideration. So when you talk about interest, penalty or late fees, whatever name you call, on delayed payment of consideration, fifth as in valuation. What is the time of supply? Time of supply is when you receive that amount. When you receive that amount. If you recall, if the interest demanded is 15,000 for late payment, and if the recipient gives only 10,000, your time of supply will be, you will pay GST on 15,000 or 10,000. If the interest demanded by supplier from the customer or recipient is 15,000, but if he is paying only 10,000, GST will be on 15,000 or 10,000 because of this time of supply. Because of this time of supply. Because time of supply for interest is what? Date when you? How much you are receiving it? So that is the time of supply. You are getting, whenever you get, only on that amount you have to pay. If you don't get, you are never going to get 5,000 because time of supply will never come for 5,000. Time of supply will never come for, but very important point. This is only for interest, not for selling price and other charges. For selling price and other charges, time of supply is governed by forward charge mechanism. For interest, it is separately governed here. For selling price and other charges, time of supply is governed by forward charge mechanism. Your actual date of invoice or due date of invoice for goods sector. For service sector, actual date of invoice or payment, whichever is earlier. Due date of invoice or payment, whichever is earlier. It is all governed by FCM. It is all governed by, only for this interest, it is governed by separately interest provision. Why I am telling this? If I don't get 1 lakh rupees basic selling price, should I pay GST on 1 lakh rupees? If my customer does not pay even basic selling price, should I pay GST on 1 lakh rupees? Yes. Yes. Why? It is governed by time of supply under FCM. So I have to pay it. If you apply this formula, even if payment is not paid, there will be either actual date of invoice or due date of invoice for goods, or for services, actual date of invoice or date of completion of services. It will be there. Some date will be there. I have to pay GST on my basic price and other charges. The only area where I focus on receipt is interest. Interest on delayed payment of consideration. That is only when I receive it. Only when I, and only to that amount. If I have asked 15,000 but I receive only 5,000, GST will be only on 5,000. And that too for interest, it is worked very differently. 5,000 is always assumed to be including tax, that is GST. So it is not entire 5,000. Value is 5,000 multiplied by 100 divided by 100 plus rate of tax. 100 plus. That is all about your time of. If you look at this time of supply, by coincidence, it comes from complicated to simple. FCM different for goods and services and 2 steps. RCM different for goods and services but only 1 step. Then voucher supply, same for goods, same for services, 2 scenarios. 2 scenarios. Residual cases, fraud cases, no record cases. Same for goods, same for services, but 2 scenarios. Interest on delayed payment of consideration. Same for goods, same for services, only. So it comes down in terms of the complexity involved. It comes down in terms of complexity involved. So that is everything about your section 12 and section 13 with respect to your time of supply. Now, an important point that we have left out, when you're discussing time of supply for forward charge mechanism, and when it is all about goods sector and when it is all about regular scheme, normally we talk about what scenario? Time of supply if the invoice is raised in time. One answer. If the invoice is not raised in time, another answer. Right. But when you talk about specified actionable claim, if the invoice is raised in time, invoice is not raised in time. So when you talk about in a normal situation, payment is not relevant. But when you talk about a special situation which is specified actionable claim, betting, gambling, lottery, horse racing, casinos, and online money gaming. If invoice is raised in time, actual date of invoice. If invoice is not raised in time, due date of invoice. So when you talk about forward charge mechanism, goods sector, regular scheme, payment is not relevant. But when you talk about forward charge mechanism, goods sector, regular scheme, for specified actionable claim, your payment is relevant. If invoice is raised in time, it is actual date of invoice or date of receipt of payment, whichever is earlier. If invoice is not raised in time, it is due date of invoice or the date of receipt of payment, whichever is earlier. So here, if invoice is raised in time, actual date of invoice or payment, receipt of payment, whichever is earlier. Not raised in time, due date of invoice or date of receipt of payment, whichever is earlier. So here you do make a comparison. So when your payment is not relevant, your payment is not relevant, if at all it is forward charge mechanism, goods sector, regular scheme, in a normal case, other than OMG case, other than not OMG case, other than specified actionable claim case, which includes OMG. So FCM, goods sector, regular scheme, normal case, other than specified actionable claim, payment will not be considered. Your payment will not be considered. Invoice in time, actual date of invoice, not in time, due date of invoice. Otherwise, for goods sector, for FCM, goods sector, regular scheme, if it is specified actionable claim, payment is actually relevant. Right. That's all about the small change which is there here. Now, basically, we are talking about small dealers, small persons who find it difficult to comply with the GST provisions. One are very small person who are not at all required to take registration. One are comparatively bigger who can take registration but work under a simple scheme called as composition scheme. First, we'll not touch composition scheme. We'll talk about those persons who need not even take registration. This is actually from your registration chapter. Section 22 read along with section 23. This is actually part of your registration chapter. Now let us remember the small story so that you can easily understand when it is 20, when it is 40 and when it is 10. Right. If you're talking about politics, which is very relevant at least now, Apni politics, Nama politics. Apni politics, which is translated into Nama politics. Right. Apni politics can be summarized into three important things in India. One is money, then it is land, and one is Ram. Money, for being in politics, money, automatically from money you'll get land, and for winning in politics, we do have that factor of Ram, isn't it? Religion is a fact. Whether you accept it or not, whether you like it or not, this is what is happening in politics in India. And this, we came out with this story almost in 2018 or 2019, which is more relevant today. Money, land, and Ram. And when you are very small person, when you are in student's life, very small person, it should act like time pass for you. It should act like time pass for you. When you are not at all even eligible for say voting, or you are eligible but you don't understand much about it, it should be like your time pass. You should not be seriously involved and talking some nonsense which does not makes even sense to you. Right. So Apni politics can be summarized into three things: money, land, and Ram, which is time pass when you're a very small person. Right. Then you have the balanced states or union territories. Now, what is Apni politics? Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya. Sikkim, Uttarakhand, Meghalaya. Tripura, Manipur, Nagaland, Mizoram, Nagaland, Mizoram, Telangana, and Puducherry. Telangana and Puducherry. Then you do have obviously your balance states and union territory. If you talk about Tripura, Manipur, Nagaland, Mizoram, be it any case, whether it is supply of goods or supply of services or supply of goods and supply of services, be it any case, the answer is quite simple. 10 lakhs. When it is Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana and Puducherry. Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana and Puducherry. In that case, again, whether it is supply of goods or supply of only services or supply of goods plus supply of service, it is 20 lakhs. When you're talking about the balance states and union territory, answer is separate for only supply of goods, for only supply of services or supply of goods with supply of services. For only supply of services and supply of goods and supply of services, it is 20 lakhs. But if it is only and only supply of goods in these states, then it is 40 lakhs. Very simple way to understand 40, 20 and 10. Need not by heart all the states everywhere, here and there. If you see ICI text, you'll find around 10 pages, 12 pages only dedicated to it, explaining when it is 40, when it is 20, when it is 10, giving a chart, states, headings, complicated headings. It's very easy way to remember 40, 20 and 10 lakhs. 40, 20 and 10 lakhs. SUM stands for Sikkim, Uttarakhand and Meghalaya. AP stands for Arunachal Pradesh, Tripura, Manipur, Nagaland, Mizoram. TP stands for Telangana, Puducherry. Then you have balance category. Are you guys clear with this understanding? When I started, you felt that this will take a very long time, 40, 20, 10, because it's a very detailed number of states are there. That's it, simple. Now, two special points attached to 40 lakhs. Two special points attached to 40 lakhs. One it is positive, one it is negative point. What is the positive point? Normally, 40 lakhs is there only for supply of goods. But if it is supply of goods with supply of only one particular service, which is interest on loans, interest on no other service, interest on loan which is exempted. If it is supply of goods with supply of a particular service, no other service, it should be interest on loans. Normally, if I tell supply of goods plus supply of service, you would have said me 20 lakhs. But now it will still remain at 40 lakhs. You will not stick to 20 lakhs. You will remain at 40 lakhs. Because normally if I tell supply of goods plus supply of service in balance states, union territories, you would have said 20 lakhs. But in this case, 40 lakhs. And negative, other part. If at all, you're dealing only with goods, you're supplying goods, but you're dealing with notified goods, certain notified goods. What are these notified goods? You're talking about pan masala, tobacco, ice cream, pan masala, tobacco, ice cream and building materials. certain building materials. You not remember the HSN number and all. Building materials used in construction sector. Pan masala, tobacco, ice cream and building materials. Even though you're dealing with goods only in that state, but you're dealing with one small item is notified goods. One small item is you're dealing with hundreds of goods. One of the item is ice cream. You're dealing with hundreds of goods. One of the items is say tobacco. Finished. Normally, if you're dealing with only goods sector, your answer would have been 40 lakhs. But if you're dealing with notified goods, you'll go down to 20 lakhs. Is that clear? Is that clear? So when you talk about pan masala, tobacco, ice cream, building material, even though you're dealing only with goods, but they are notified goods, you will come down to 20 lakhs. When you talk about supply of goods plus supply of services, normally it is 20 lakhs, but if it is that supply of services only, no other service, only interest on loan, which by the way is exempted. That's another fact, which by the way is exempted, but that will be counted in turnover. You will remain at 40 lakhs. You will remain at 40 lakhs. Are you guys clear with this understanding? So this is everything about when to go for 40, when it is 20, and when it is 10. And in special case 40, when it will remain at 40, even though there is service, when it will come down to 20, even though it is very, very simple and effective way to remember this 40, 20 and 10. Now, to complete this, just remember one important aspect. Limits are all over. Limit is pan-India. So you don't see state-wise. All these limits are aggregate term, which means if I'm working in 2 states, supposing I'm in Tamil Nadu dealing with goods. Now you have all the answers. Tamil Nadu only goods. Maharashtra only goods. West Bengal services. Fast. Answer is in front of you. West Bengal services. Tripura only goods. Telangana only goods. Puducherry services. Arunachal Pradesh, goods plus service. Andhra Pradesh, goods plus services. Andhra Pradesh only goods. Andhra Pradesh goods plus service, 20 lakhs. Andhra Pradesh only goods, 40 lakhs. Jammu only goods. Ladakh, Jammu only goods, 40 lakhs. Ladakh services. Andaman and Nicobar only goods, 40 lakhs. Lakshadweep, goods plus service, 20 lakhs. It is 20. You can easily find out which area, which portion. But please understand this, if at all you are working in one state, it's very simple. What if we are working in 2 states? Or 2 or more states? The limit that you're seeing of 40, 20, 10 is not for individual state. It is for pan-India. The limit that we are seeing for 40, 20, 10, it is not per state. Legislation limit is not per state, it is aggregate turnover. Pan-India, your turnover should be less than 40 or 20 or 10 as the case may be. As the case may be. Clear? But when you are taking registration, it is not pan-India one. It is each state. So checking for registration, pan-India. Taking registration, each state. Checking for registration, pan-India. 40, 20 lakhs, 10 lakhs to check whether you have to get registered or not. When you're seeing the turnover of 40 lakhs, 20 lakhs, 10 lakhs, it is pan-India. You're going to see aggregate turnover. When you have to get registered, it is state-wise? It is, I'll give a master question. You need not see multiple questions. Then you can see any questions of ICA anywhere. I'll give a master question. You are working in Tamil Nadu, Telangana. You keep telling the answers. I'll keep changing the questions. You keep telling the answers. Goods. Only goods. What is the registration limit? When it is 40 lakhs and Tamil Nadu it is 40 lakhs. Telangana is, so whenever it is 40 and 20, you cannot apply, it is not per state. So what will be your aggregate turnover limit? What will be your aggregate turnover? Aggregate turnover is pan India. You'll go with limit. Which limit? No, you'll go with lower limit. You'll go with, so you'll not go with 40 lakhs. You'll go with lower state because the other state wants the limit to be less so that people are more and more registered. Telangana is telling that I want more people to be registered. So it wants the limit to be 20 lakhs. So you'll go with which limit? Lower state. You'll go with lower state. Then you will see the actual aggregate turnover. You will compare. In Tamil Nadu, say 10 lakhs. In Telangana, 15 lakhs. What is the actual turnover? 25 lakhs. 25? Is it more than 20 lakhs? Get registered in Tamil Nadu. Get registered in. That is the second step. Correct. But if I change the question, the goods that you're dealing in Telangana are exempt supply or non-taxable supply. Whether Telangana is affected, not affected. Telangana anyways will not get any GST because in that state you're dealing only with exempt supply, non-taxable supply. Now what will be the limit? The limit will jump up to 40 lakhs. Why? Suddenly 40 lakhs. Telangana wants lower limit when it is going to get revenue. But if in Telangana you're dealing with only exempt supply and non-taxable supply, anyways, Telangana is not going to get any revenue. Now Telangana tells, don't come down for me. Anyways, I am going to get a zero revenue. You stay at your limit. You can go back to 40 lakhs. Now, I have changed the question. There comes Tripura. There comes Tripura. Now Tripura is dealing again only with goods. What is the limit now? Now you are dealing in 3 states. TTT. Telangana, Tamil Nadu, Telangana, Tripura. But now you are interested in which category? 40, 20 or 10? Tripura tells, see, you are all big guys. I am small guy. Please feel for me. Please come down. So what is the limit now? 10 lakhs. But wait. If I tell that, no. In Tripura also you are dealing with goods which are fully exempt or fully non-taxable supply. Tripura is affected or not affected? Tripura is affected or not affected? Tripura tells, don't worry. Anyways, I am not going to get a single paisa revenue. You can go back to higher limit. What is that higher limit? Depends. It may be 40, it may be 20. In this question, it is 40 lakhs. In this question, it is 40 lakhs. But Telangana now tells that, no, in my state, you are dealing with exempt supply, non-taxable supply, plus also taxable supply. Now, Telangana is affected, not affected. Telangana is affected, not affected. Telangana is affected. Now it tells that, no, I am going to get some revenue. So I cannot allow you to be at 40 lakhs. You come down to my limit. Whether in that limit, whether you consider Tripura? No. Why you not consider Tripura? Tripura is not going to get a single paisa revenue. Tripura tells, please don't take care of me. You fight among yourself. I'm out. But when you're fighting among Tamil Nadu and Telangana, Telangana was actually not affected. But suddenly I've changed the question. I've said that Telangana deals with non-taxable, exempt as well as one portion is taxable. Now Telangana will get revenue or not? It may get a small revenue, but will get revenue or not? So it wants the limit to be at 20 lakhs. It wants the limit to be at 20 lakhs. If I tell no. Telangana again tells that no, I have changed my decision in Telangana state. I'll not deal with taxable supply. You will come back to Tripura is not affected, Telangana is not affected. You'll go to Tamil Nadu. But Tamil Nadu tells in Tamil Nadu state now you have started dealing with services, goods plus. Then what will be the answer? Because Tamil Nadu it is goods plus services. Goods plus services. No, sir, that service is only interest on loan. I can keep changing this. The only thing that I wanted you to understand, if you know the concept, you can be a step ahead of ICI. You are not going to see different questions and tell that, okay, so this different question, that different. You know everything about it. When they are affected, normally when there are two states, one having higher limit, one having lower limit, you'll go with. But that lower limit state is not going to get revenue. Go back to. That's a summary. We started our journey with 20, then 40, then 10, then 40, then 20, then 40, then 20, then again. If I can keep changing it. Suddenly I tell that no, Tripura is affected. Tripura tells that I have a small taxable supply. You'll come down suddenly to 10 lakhs. Now with this question, I give the actual turnover. In the actual turnover, Tamil Nadu is having goods plus only interest on loan. Say it is having 35 lakhs. Telangana only exempt supply, non-taxable supply. Say 10 lakhs. And Tripura exempt supply, non-taxable supply only 10 lakhs. So I'll make things simple. Now the limit is 40 lakhs because Telangana is not affected, Tripura is not affected, 40 lakhs. What is the actual aggregate turnover? This is the limit. Now what is your threshold limit? Forget all the entire flow. What is your threshold limit for registration? What is your threshold limit for registration? What is your actual aggregate turnover? Actual aggregate turnover 55 lakhs. Should you get registered? Yes, you are required to get registered. But when you are going to get registered, you will get registered in Tamil Nadu. As per section 22, you will get registered even in Telangana, and you will also get registered in Tripura. But there is a provision in section 23. There is a provision in section 23 which tells that no need of registry in Telangana and Tripura. You are not going to pay a single paisa GST. Now that's a separate thing. First thing is about the flow that we have discussed. Now it is a separate thing. When you are getting registered, it is registered in separate states. So ideally speaking, your limit is 40 lakhs. Your actual aggregate turnover, all the states together is 55 lakhs. You should get registered in Tamil Nadu, Telangana and Tripura. But there's a provision. 22 answers, you have to write all the answers. As per section 22, you have to get registered in Tamil Nadu, Telangana and Tripura. However, as per section 23, when in a state you are having only exempt supply, non-taxable supply, you need not get registered in that state. So the net summary is, you will get registered only in. Why? You are not going to pay any GST to Telangana and Tripura. Why to get registered unnecessary? If I make a fine change in the question, even in Tamil Nadu you are dealing with exempt supply, non-taxable supply. The answer is still 40 lakhs. Still 40 lakhs. Because Tripura not concerned, Telangana not concerned, it is 40 lakhs. Actual aggregate turnover still 55 lakhs. As per section 22, you have to get registered in all the 3 states. But as per section 23, don't get registered in any state because you are not going to pay a single paisa GST revenue to any of the state. You are not going to pay a single paisa GST revenue to any of the state. So your answer will be as per section 22. Your actual aggregate turnover 55 lakhs has crossed the threshold limit of 40 lakhs. How we got 40 lakhs? We know the flow now. Therefore, you have to get registered in all the 3 states. But section 23 tells that if in a state you are dealing only with exempt supply or non-taxable supply, you need not get registered. In this case, in all the states, you're dealing only with exempt supply, non-taxable supply. No state you're going to give any GST revenue. 23 tells that don't get registered anywhere. See, 23 gives relaxation for each state independently. In the previous point, when I said that in Tamil Nadu, nothing, then you are registered only in Tamil Nadu. You are not registered in Telangana, Tripura. So it could normally the questions are asked in this manner. The point here is when it is all about registration, you have to decide whether you are going to pay or not. Then 23 will tell that not to get registered. When you are going to get registered, whether it is a lower limit state or a higher limit state is not relevant. Whether it is Telangana or Tripura or Tamil Nadu is not relevant. If you are not going to pay GST revenue in a state, no need to register in that state. Section 23. Section 23. But that is the second step. So first step is aggregate turnover, pan India. Pan India, it may be 40, 20, 10. When it is 40, when it is 20, when it is 10, I have explained with lot of flows, making changes in the example. Normally, if you're dealing with higher limit state and lower limit state, you'll go with lower limit. But if that lower limit state is not being affected, which means it is not going to get any revenue, you can go back to higher state. And that is pan India. Once you get that pan India limit, compare with actual aggregate turnover, add all the turnovers. When you see that turnovers being more than the limit, you have to get registered. When you have to get registered, you have to get registered in all the states. But if in a same scenario, you are not going to pay GST revenue to any particular state, 23 tells that no need of getting registered in that state. In other state, you get registered, but in that state, no need to get registered. This is some answer example. Now you see that obviously a question in every exam paper about your registration. And IC have gone to the extent of asking 2-3 states. 3 states is very common. Obviously, they have not gone to the extent of 4 states because when you know for 2 states, 3 states, you can apply the same for even 5 states, 10 states. The same logic holds good. So IC have gone to the extent of asking questions based on 3 states, which is very basic and simple question. But remember 2 steps. What is step number 1? Fixing the threshold limit for registration. Fixing the threshold limit for registration. Is it state wise or pan India wise? It is pan India wise. And there is a flow 40, 20, 10. You have to decide when it is 40, when it is 20, when it is 10, when to come back again, when to come up again. Normally, if it is higher and lower, you will go to lower, but you can come back to higher if the lower state is not affected. Second step is taking registration. If you cross the limit, you have to take registration. Normally in all the states, but if in a state you are not going to pay any GST revenue, section 23 tells that no need to pay, no need to get registered, no need to get registered. So registration is state wise. Checking the limit is pan India wise, but taking registration is state wise. Taking registration is state wise. That's everything about your threshold limit for registration. Composition scheme is discussed entirely in section 10. Section 10. Now, when you talk about your composition scheme, it is a simplified scheme. It is a simplified scheme. The scheme is simplified because not everyone will be able to comply with complicated provisions of GST law. If your turnover is very small, don't take registration. If it is a bit bigger, you can go for composition scheme. You can go for composition scheme. Now, please understand that there are certain advantages versus disadvantages when you talk about composition scheme. Advantages versus disadvantages. So when you talk about the advantages, if I were to write composition scheme versus regular scheme, rather I'll write it ulta, regular scheme versus composition scheme. Now let us talk about the advantages. The advantages of your composition scheme. The advantages of your composition scheme, that it is a simplified form of calculation. The calculation and the rates are lesser. Right. Main advantage, what you see here. The main advantages. The rates are normally, what are the rates in regular scheme? What are the rates in regular scheme? 0, 5, 8, 12, 18, 28, etc., 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 etc. The rates in composition scheme are always simple. 1, 5, normal composition scheme, and 6, special composition scheme. 1, 5 in normal composition scheme and 6 in special composition scheme. This 5 is not the regular rate same. There is normal rate also 5, but this is composition rate. This is composition rate. The second advantage is when you talk about your regular scheme, either it is monthly payment, monthly return, monthly payment, monthly return, or it is monthly payment, quarterly return. You read it ulta, reverse, it is called as QRMP scheme. QRMP scheme, quarterly return, monthly payment. But the right terminology should be MPQR, because first you make the payment, then you file the return. But name are not always indicative. It's only a simple form of naming. They thought that QRMP sounds better than MPQR. Therefore, they give it QRMP scheme. But right way is monthly payment, quarterly return. Normally it is monthly payment, monthly return. Normally it is monthly payment, monthly return. Very rarely it is monthly payment, quarterly return. For selected people, and the scheme is not so attractive, very few people will go. First of all, very few people are eligible. Out of those are eligible, very few people will go for it. Very few people will go for it. But in your composition scheme, it is quarterly payment, yearly return. Quarterly payment, yearly return. Quarterly payment, yearly return. Right? And there is one more advantage. Let us say the first advantage, second advantage, third advantage. You are required to maintain stock details when you are talking about regular scheme. In your composition scheme, you are not required to maintain stock details. You are not required to maintain stock details. No stock details. No need to have stock details. And when you talk about your regular scheme, the rate can have composition, not compensation cess. It can be 28% plus compensation cess. Correct? What are the rates that we discussed? 0, 5, 12, 18, 28, 28% plus compensation cess, etc. etc. Correct? Correct. So that's a possibility of compensation cess. Here, whatever is the rate, whether the rate of the item is 0, 5, 12, 18, 28, 28 plus cess, forget about everything. You are going to pay 1, 5 or 6. So obviously compensation cess is ruled out. You are going to pay simplified rate. You are going to pay simplified. You ignore the actual rate of tax. Whatever is the actual rate of tax in here. Supposing you are going to a general merchant shop where they are dealing with thousands of items. It is very difficult for him to find out what is the rate on which item. For them, this is very attractive. They'll either pay 1%, normally it is 1%, 5% is for restaurant, outdoor catering, so that is very special. 6% is special composition scheme, very special. So normally it is. So whatever is the rate, the item may have 0 or 5 or 12 or 18 or 28% or 28% plus compensation says etc. What are you going to pay under composition scheme? 1 normally, 5 is restaurant, outdoor catering, and 6 is special composition scheme. Are we clear with the advantages? These are all the advantages of composition scheme. These are the differences, but advantages. So we are seeing the differences as well as the advantages together. Likewise, there are certain disadvantages. There are certain disadvantages of composition scheme. So what we saw now were the advantages of composition scheme. What we are seeing now are the disadvantages of composition scheme. When you talk about your regular scheme, we are talking about your output tax, outward supply, sales, technically called as outward supply. What you will do when you talk about your output tax, you are going to collect and pay. Correct? You don't pay from your pocket. Basics of indirect taxation. You collect and pay to the government. You collect and pay to the government. You collect and pay to the government. Whether it is 5%, 12%, 18%, 28% or 28% plus compensation says you collect and pay to the government. But when you talk about your composition tax, you cannot collect from the customer. You have to pay from your pocket. Whatever percentage, normally it is 1, but it can be 5 or 6. You have to pay from your pocket. You have to pay from your pocket. You cannot collect from the customer. That 1%, 5% or 6%, 6%. That is the reason we call it as composition tax. I don't equate that 5% with normal 5% because this 5% you cannot collect it. You cannot collect it. You have to pay from your pocket. You have to pay from your pocket. This is disadvantage of composition scheme. This is one of the disadvantage of composition scheme. The other disadvantage is on your purchases, inward supply. On your inward supply, you can claim input tax credit if you are under regular scheme. That's the beauty of indirect taxation, GST, correct? Cascading or no cascading? In GST, cascading or no cascading? You can take the credit on your inward supply, that is purchases. Therefore, your cost increases or decreases? Cost increases or decreases? If you can take the credit, your cost decreases. Your cost decreases. Now, under your composition scheme, you cannot take input tax credit. On your purchases, you cannot take any ITC. It gets added to your cost. It gets added to your cost. It is going to get added to your cost. Are you guys clear with this understanding? So, for your composition scheme, it gets added to your cost. You cannot take input tax credit. You cannot avail your input tax credit, which means whatever items are being purchased by a composition scheme dealer, all the GST on the purchase invoices or the expenses invoices or the capital goods invoices, fixed assets invoices, it gets added to your cost. When your cost increases, price increases. Obviously, this composition tax, you can even not collect from the customer. Your composition tax increases. Your composition tax, but you cannot collect it from the customer. So, these are the major disadvantages of your composition scheme. Major disadvantages. What are the major disadvantages? One is on outward supply, one is on inward supply. On your outward supply, can you collect and pay composition tax, or you have to pay from your pocket? You have to pay from your, it is against the principle of indirect taxation, correct? You have to pay from your pocket. Second, on your inward supply, can you take credit or no credit? Can you take credit or no credit? You cannot take credit. Again, it is against the principle of indirect taxation that you can take credit. So, in composition scheme, government gives you something and takes away the important aspects. So, it tells that you cannot collect tax, but you have to pay from your pocket. This is on your sales, outward supply. On your purchases, that is inward supply, you cannot claim input tax credit. You cannot claim input tax credit. These are the advantages versus disadvantages of your composition scheme. So, this makes your job very simple when you are seeing various concepts of composition scheme. Very, very simple job. You are comparing regular scheme with composition scheme. Simultaneously know the advantages of composition scheme. You also know the disadvantages of composition scheme. There are other differences as well. But these are the differences we'll now walk through. These are the major points. Are they the only advantages and disadvantages? No. There are other differences as well. Like when you're talking about composition scheme, regular scheme dealer will give you tax invoice. But a composition scheme dealer will give you bill of supply. A normal person, regular scheme dealer will give you tax invoice. Regular scheme person, what are the rates of taxes which will be there? 0, 5, 12, 18, 28, 28 plus compensation says, etc., etc. For 0%, he'll give bill of supply because there is no tax. 0%, there is no tax, he'll give bill of supply. For all others, 5, 12, 18, 28, 28 plus, etc., etc., where there is a tax, he'll give tax invoice. A composition scheme dealer always will give. Why? He cannot collect tax. Why? When he cannot collect tax, can he write that composition tax on his invoice? Though he is paying 1%, 5% or 6%, can he mention that on his bill of supply? No. So he has to mention, he has to give bill of supply, and on that bill of supply he'll write, I am a composition taxable person, I cannot collect tax. So on the bill of supply, whether there will be any tax? No. On the bill of supply, whether there will be any tax? A composition scheme dealer is going to pay 1, 5 or 6%, but he cannot collect any tax. And when he cannot collect any tax, what is the document that he'll give? He'll give bill of supply. He'll write on this particular bill of supply telling that I am a composition taxable person, I cannot collect tax. Regular scheme dealer will give what document? Normally tax invoice 5, 12, 18, 28, 28 plus compensation cess, etc. etc. But if it is 0%, why? Because there is no tax. A composition scheme dealer will always pay 1, 5 or 6, but he'll always give because he cannot collect tax. He cannot write tax on the invoice. He cannot collect tax means he cannot write tax on the bill of supply. Secondly, a composition taxable person should display on all the signboards, whether it has principal place of business, that is head office, or additional place of business, that is branches, godowns, etc. In all the name boards, right, he has mentioned the fact that he is a composition taxable person, so that he is giving an indication to the customers that when you're entering the shop, you are entering the shop of a composition taxable person. You're entering the shop of a composition taxable person. So on all the signboards, he has to mention the fact that he's a composition taxable person, not only at his principal place of business, but also at all the additional place of businesses. If you're under regular scheme, no need, you just write your name and GST number. If you're under composition scheme, you write the name, GST number, also mention the fact that you're a composition taxable person. Composition taxable person. Right. Now, other aspects, and the main aspect, when it is what limit. Like for your registration, very small person, there's a limit of 40 lakhs, 20 lakhs and 10 lakhs. Under composition scheme, there's a limit of 150 lakhs, 75 lakhs and 50 lakhs. 150, 75 and 50. 150 lakhs, 75 lakhs and 50 lakhs. Now, a similar story that was discussed for very small dealers, we'll discuss it again. Now, what you need to understand is, when you're talking about apni politics can be summarized into three things in India. What is that? Money, land and Ram. Now you are very small or small? Very small means no registration. Now you are very small or small? Now no more politics is time pass for you. When you are very small, politics was time pass for you. Now you are not very small. You are small. You have got the voting rights. So you are small. Now politics cannot be time pass for you. So here Telangana, Puducherry doesn't comes. Here Telangana, Puducherry doesn't comes. And all the other states and union territory. All the other states and union territory. What about your composition scheme? It doesn't work very similar to your 40 lakhs, 20 lakhs, 10 lakhs, but it is more or less you can compare. But you need to understand one important factor, that when you're talking about your composition scheme, there is something called as normal composition scheme and something called as special composition scheme. Now, whatever we are discussing is all for normal composition scheme. For special composition scheme, that is all the states and union territory. So, composition scheme is split into two parts, normal and special. Now, when you talk about your normal composition scheme, if you're working in special states, what are the special states now? Arunachal Pradesh. The AP stands for Arunachal Pradesh, northeastern state, right? All the states are northeastern states. Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Tripura, Manipur, Nagaland, Mizoram. Wait. Telangana and Puducherry will come in other states. Now you are not very small, you are small, so Telangana and Puducherry will come in other states. When you are talking about other states, other than these special states, the limit is 150 lakhs. When you are talking about special states, Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Tripura, Manipur, Nagaland, Mizoram, the limit is 75 lakhs. And when you're talking about special composition scheme, in special composition scheme, whatever states you are, you may be in any state, the limit is The limit is 50 lakhs. The limit is 50 lakhs. Are you guys clear with this understanding? We have just improvised the story. Now in composition scheme, that is normal and special. That is normal and special. In normal composition scheme, it was the same story, but now you're not very small, you're small. So now politics cannot be time pass. So remove time pass. Remove TP. Telangana, Puducherry will come in general category. And general category, what is the limit? 150 lakhs. And what is the limit for special category? 75 lakhs. This is normal composition scheme. If you're under special composition scheme, any state, be it any state, it is 50 lakhs. Now one doubt will come, say when it is normal, when it is special, correct? This doubt should run in your mind when it is normal and when it is special. Because the limit is separate for normal composition scheme, the limit is separate for special composition scheme. You should be very clear when it is normal and when it is special. Now, normal composition scheme, if you want to put in a very simple way, it is applicable for goods sector and one category which is service, restaurant and outdoor catering sector. So, service only restaurant and outdoor catering sector. Goods and restaurant and outdoor catering. Special composition scheme is applicable when other sectors, correct? If you're not covered in normal composition scheme, other cases, correct? If you're not covered in normal composition scheme, when I write other cases, I'm telling that you are not eligible for normal composition scheme. You're not fitting in normal composition scheme. So why it's so complicated? You could have written that it is all services other than restaurant and outdoor catering, correct? But that's not the reality. You cannot write in this way because in your normal composition scheme, can you have services? Yes, you can have services. Along with goods sector or restaurant outdoor catering sector, you can have other services to a small extent. To a small extent. This should not be the main thing. What should be the main thing? Goods or restaurant outdoor catering. That should be your main thing. But you can have a small portion of other services. You can have a small portion of, which means along with goods, you can have small commission. Along with goods, you can provide some brand services. Right? You can have small service sector. Along with restaurant outdoor catering, you can have other small services. Other small technical services. You can have it, but there's a limit. What is that limit? That limit for other small services is 10% of previous year state turnover or 5 lakhs, whichever is not lower, whichever is higher. That other small services can be up to this amount. What is that other small services? How much you can have? 10% of, if your previous year state turnover is 7 lakhs. If your previous year state turnover was just 7 lakhs, very small amount. 70,000 or 5 lakhs, whichever is. If your previous year state turnover is, say, 80 lakhs. So 10% of previous year state turnover is what? 10% of 80 lakhs is 8 lakhs. Or whichever is, which means till this limit you can have service. In the previous example, 5 lakhs. In this example, 8 lakhs. Minimum 5 lakhs you can always have. Correct? When I tell whichever is higher, minimum 5 lakhs you can always have. You can have that service limit. If your service is crossing that amount, get outside normal composition scheme. You are not eligible for normal composition scheme. You will go for special composition scheme. You will go for special composition scheme. Are you guys clear with this understanding? Only when you are not eligible for normal composition scheme, you will think of special composition scheme. Now let us take random states, what you are doing and see whether you are able to capture the limit. Tamil Nadu goods sector. Louder. Louder. Tamil Nadu goods means straight away normal composition scheme 1,50,000. Jammu restaurant sector. Jammu restaurant sector. So clear cut it is 1,50,000. Right. If at all I am talking about Tripura goods sector. Tripura goods sector 75 lakhs. Manipur outdoor catering sector 75 lakhs. Meghalaya, service sector. Meghalaya, only service. When I tell service, other than restaurant, outdoor catering. Louder. Louder. Now you change your answer, 50 lakhs. Maharashtra, only service. Maharashtra, only service. Quickly evaluate it. I have answers in front of you. So Maharashtra, only service. Goa, only service. Goa, only service. Bihar, goods and restaurant outdoor catering sector. Goods is there, also restaurant is there. Bihar, goods plus restaurant. 1 lakh, 1 lakh, 50. Arunachal Pradesh, only service sector. When I tell service, other than restaurant outdoor catering. Arunachal Pradesh, only service, 50 lakhs. Arunachal Pradesh, only goods sector. It is 75 lakhs. Is it clear? Now let us bring some spice to it. Now, if at all I am talking about Delhi, majorly goods with small service within the limit. Majorly goods with small service within the limit. When I tell within the limit, it is 10% of the previous year, state turnover or 5 lakhs, whichever is higher. Whichever is, so it is within the limit. Goods plus service within the limit. Delhi, goods plus service within the limit. 1 lakh 50. 1 lakh 50. Puducherry, goods plus service within the limit. Puducherry, Pondicherry, goods plus service within the limit. Again, it is 1 lakh 50. 1 lakh 50. Sikkim, restaurant sector plus other services within the limit. Sikkim, restaurant plus other services within the limit. 75 lakhs. It is 75 lakhs. Uttarakhand, goods plus service, but service is more. Louder. Uttarakhand, goods plus service, but service is more. Major part. Done. This is how you have to see the limit. Now you see any questions of ICA, you are very clear. When it is 150, when it is 75, when it is 50 lakhs. If you are not eligible for compositions, normal composition scheme, you will go for special composition scheme. Normal composition scheme is discussed in section 10.1, 10.2 and special composition scheme is discussed in section 10, subsection 2A. Right, so it is very clear to know when it is 150, when it is 75 and when it is 50. If you have a clear-cut story in your mind, then you put everything in one part rather than by hearting. This chart will tell you all the points. When it is 150, when it is 70 and when it is 50 lakhs. Whether there can be any fight between 150 lakhs and 50 lakhs. If I now, till now it was all one state. If I bring two states, can there be any fight between 150 lakhs, 50 lakhs or 75 lakhs, 50 lakhs? No. 50 lakhs means it is only 50 lakhs. If you're not eligible for normal composition scheme, you have to go for special composition scheme. In special composition scheme, all the states will always have. So there cannot be a fight between 150 lakhs, 50 lakhs or 75 lakhs, 50 lakhs. But can there be a fight between 150 lakhs and 75 lakhs? Yes. You can work in two states, Tamil Nadu and Tripura. Tamil Nadu and Tripura. Both goods. Louder. So when you are having higher limit and lower limit, you'll go for. And here, no coming back and all, nothing, no nonsense. So if it is 150 lakhs, 75 lakhs, answer is. So if you are working in Tamil Nadu, Tripura, good sector, what will be answer? So it is 150 lakhs for Tamil Nadu, 75 lakhs for Tripura. What will you select? That's it. Pan India. So you'll select 75 lakhs and you'll evaluate. All these limits are aggregate turnover, which means it is Pan India or state wise. Pan India. You're talking about Pan India aggregate turnover. Pan India aggregate turnover. Are you guys clear with this understanding? Are you guys clear with this understanding? So this is all about the limit. There cannot be a fight between 150 and 50 because both cannot coexist. There cannot be a fight between 75 and 50 because both cannot coexist. Right? It can be only 150 and 75 lakhs. And whenever there is a fight between 150 lakhs and 75 lakhs, who will win? There is no going up again. You cannot tell that, sir, whether it will come back. No. If it is 150, 75, answer is always 75. Full stop. Answer is always 75 lakhs. Are you guys clear with this understanding? So this is all about the limit of 150, 75 lakhs and 50 lakhs. 150, 75 lakhs and your 50 lakhs. About your composition scheme. I repeat, you will think of special composition scheme only if you're not eligible for. So first step is always normal composition scheme. If you see that you're not fitting the You come out of it. You will go for. So can you think directly of special composition scheme? No. First, you will evaluate 150 lakhs, 75 lakhs. If you see that you are not fitting that, then you have to go for 50 lakhs. If you see that you are not fitting that also, what is the answer? Regular scheme. Go to not fitting in normal composition scheme. If you're not even fitting in special composition scheme, please go to regular scheme. Please go to regular scheme. Are you guys clear with this? And it is highly possible. Supposing you're dealing with goods sector and service sector, but service is major. What will be the limit? If you're dealing with goods and service, but service is major. Louder. It is 50 lakhs, special composition scheme. But you see your turnover is more than 50 lakhs. Your turnover is supposing 80 lakhs. But it is more than. You're there in Tamil Nadu. I'll make it very simple. You're there in Tamil Nadu. You're dealing with goods and services. Services more than the limit. This is called as inner limit. More than the limit. More than the limit. Inner limit. That is 10% of previous year state turnover or 5 lakhs, whichever is higher. So in Tamil Nadu, you're dealing with goods and services, but services more than limit. Services major. Right? Can you think of 150 lakhs, 75 lakhs? No. You can think only of special composition scheme. What is the limit there? But if you see your turnover is 75 lakhs, you cannot even think of, you are ruled out of normal composition scheme. You cannot even fit under special composition scheme. Please go to regular scheme. Please go to evaluate normal, evaluate special. If you're not fitting anywhere, go to regular scheme. Go to regular scheme. You are not allowed to enter composition scheme. Now to do with more with numbers, there are some important differences when you talk about your 40 lakhs, 20 lakhs and 10 lakhs limit. And when you compare it with 150 lakhs, 75 lakhs, 50 lakhs limit. People make a lot of mistakes here because this is threshold limit for registration and this is threshold limit for composition scheme. There are certain important differences that people fail to understand. Right. Now, first difference is this limit when you talk about 40 lakhs, 20 lakhs, 10 lakhs. This is only of current year aggregate turnover. If your current year aggregate turnover is up to 40 lakhs or 20 lakhs or 10 lakhs, then you need not take registration, correct? If your current year aggregate turnover is up to 40 lakhs, 20 lakhs, 10 lakhs, then you need not take registration. But you don't see previous year turnover and all. You see current year. You see the existing year aggregate turnover. Here, if your previous year aggregate turnover is less than 150 lakhs, 75 lakhs, 50 lakhs, then you can enter composition scheme. Your entry is there inside composition scheme. Plus, you have to also ensure that if your current year aggregate turnover crosses 150 lakhs, 75 lakhs, 50 lakhs, you have to exit composition scheme. Both are important. For entry point, you will see the previous year aggregator. Can I enter inside composition scheme? For that, you have to check previous year aggregate turnover up to 150 lakhs, 75 lakhs or 50 lakhs. If it is that, please enter composition scheme. If it is more than that, you cannot even think of compositions. That is the entry point. For entry point, you will always check previous year aggregate turnover. Now we are inside composition scheme. Assume that you are inside composition scheme because your previous year aggregate turnover was within the limit. When you are inside composition scheme, you cannot be inside composition scheme throughout the year. Supposing we are talking about normal composition scheme 150 lakhs. Just think of it. My previous year aggregate turnover is 100 lakhs. Can I enter? Limit is Tamil Nadu goods. Tamil Nadu goods means what is the limit? Tamil Nadu goods is what is the limit? 150 lakhs. My previous year turnover is 100 lakhs. Can I enter composition scheme? Yes. My previous year turnover is up to 150 lakhs. I can enter normal composition. I can enter it. I can enter. If my previous year turnover itself is 2 crores, 200 lakhs. I cannot even enter. So if I have to check my previous year turnover, if it is up to 150 lakhs, in the first example it was 100 lakhs. Can I enter? Yes. Once I enter, it doesn't mean that I'll be inside composition scheme forever. My current year aggregate turnover crosses 150 lakhs. My current year aggregate turnover say 170 lakhs. Will I be inside composition scheme forever? No. Till 150 lakhs, I'll be working inside composition scheme. For the last 20 lakhs, I'll go for regular scheme. I will exit composition scheme. I will exit composition scheme. So if I were to tell in this way, I've started my business. I'm into year 1, year 2, year 3. I've started my business means my previous year turnover is 0. My previous year turnover is 0. Year 1 turnover is 100 lakhs, year 2 turnover is 170 lakhs, year 3 turnover is 130 lakhs. And we are talking about, I have to give a context, therefore I am giving a context that you are talking about Tamil Nadu goods, which means the limit is 150 lakhs. In the first, we are talking about composition scheme entry. Then we are talking about how much is composition tax based on exit. Based on exit. Now, can I enter composition scheme? In the first year, can I enter composition scheme? Yes, I can enter composition scheme. Will I exit composition scheme? I will not exit composition scheme. What will be my composition tax? My composition tax will be 100 lakhs. Good sector means 1%. Clear? Second year. When I enter second year, I will check my previous year aggregate turnover. What is my previous year aggregate turnover? Year 1, my previous year aggregate turnover was 0. Year 2, my previous year aggregate turnover is 100 lakhs. Is it within the limit of 150 lakhs? Can I again continue inside composition scheme? This was entry. This is continuation. This is continuation. Can I continue for composition scheme? Yes. Because my previous year aggregate turnover is up to 150 lakhs. It is 100 lakhs. Will I be under composition scheme forever throughout the year? No. I have to exit when I'm crossing. So my previous year aggregate turnover is up to 150 lakhs. I can enter. But now my current year aggregate turnover has crossed. So what will happen? Till 150 lakhs, I'll be under composition scheme. Assume that I am dealing with goods which is having 12% rate. After that, I'll be going to regular scheme. And my regular tax, what is the normal rate? I have to exit composition scheme the moment I cross 150 lakhs, and thereafter I have to pay regular tax. Everything will apply. Normal things will apply. I have to give tax invoice, I can collect tax, I can claim input tax credit, etc. Because now I am under regular scheme. Year 3. Can I enter composition scheme? When I see my year 3, my previous year aggregate turnover is 170 lakhs. Can I enter? I've already exited. Can I again enter? No. This year I cannot enter. Why? My previous year aggregate turnover is 170 lakhs. Now if I cannot enter, I'll only pay regular tax. How much? 130 lakhs multiplied by 12%. Year 4, I'm not writing it, but year 4. When I go for year 4, can I enter composition scheme again in year 4? Yes, but this will be new entry. It is not continuation. This will be simple. It is a yearly check. Right. Now, people actually confuse that what is this previous year 150 lakhs, 75 lakhs, 50 lakhs. It is all entry. It's only to check whether you're allowed or not, whether you're welcome or not. Whether you're welcome inside this class or not is based on this entry. For continuation, there is some condition. Actually, you are going to pay only based on current year turnover. So current year, you will see exit point as well as payment. So if you see current year, this previous year, entry was always based on previous year aggregate turnover. Your continuation was always based on current year aggregate turnover. Are you guys clear with this understanding? So that is an important part. Now you understand in composition scheme that is both previous year aggregate turnover, but that is not for your exit and payment. It is only for entry. Then current year aggregate turnover is mainly relevant for your exit. Now, second important point, that when you're talking about your registration limit, 40 lakhs, 20 lakhs and 10 lakhs, and this is relevant only till you get the registration. This is a yearly affair. This is only till you are registered. Till you are, once you are registered, your limit of 40 lakhs, 20 lakhs, 10 lakhs is not at all relevant. Even assume that you are not crossed the limit of 40 lakhs, 20 lakhs, 10 lakhs. If you've taken registration, payment is must. Forget about 40 lakhs, 20 lakhs and 10 lakhs. Supposing my turnover is only 2 lakhs. For some reason I have taken, payment is must. Then forget about 40 lakhs, 20 lakhs, 10 lakhs. Once registration, delete from your mind 40 lakhs, 20 lakhs, 10 lakhs. This 40 lakhs, 20 lakhs, 10 lakhs is only for your registration. If at all you have registered at that point of time or even before that point of time, forget about 40, 20, 10. Continue making the payment, and you are not going to do this every year. Once you are registered, after that, forget about it. After that, forget about it. Whereas your composition scheme is not like that. Composition scheme will keep changing year on year, which you have seen with the help of that particular example. Now, second important aspect that one needs to understand is that when you're talking about your registration, you are not even concerned with state turnover. You're not even bothered about your state turnover. But here you require state turnover also. You do require state turnover. You do require your previous year state turnover, and you do require your current year state turnover. Previous year state turnover is relevant only for your normal composition scheme for finding out the service limit. For finding out the service limit. For finding out how much service you can have. So this is relevant in only in normal composition scheme for finding out service limit. What was that? 10% of previous year state turnover or 5 lakhs, whichever is higher. It will vary for state to state. Supposing you're working in 2 states, you'll have service limit different in one state, different in other state. Different in one state, different in other state. Right? So service limit, previous year state turnover. And current year state turnover is required for everything. Current year state turnover is required for normal composition scheme as well as special composition scheme for payment purposes. Whenever you're going to make the payment, it is based on current year state turnover. It is based on, see, if I'm working in Tamil Nadu and Andhra, will I pay taxes together in both the states? I'll pay separately in Tamil Nadu, separately in Andhra. Separately in Tamil Nadu, separately in Andhra. Supposing in a particular quarter, because I'm going to pay on quarterly basis. Because I'm going to pay on, in a particular quarter, in Tamil Nadu, the turnover is 10 lakhs and in Andhra, the turnover is 5 lakhs. I'm dealing with goods. What I'll do? In Tamil Nadu, I'll pay 10 lakhs multiplied by 1%. 10 lakhs multiplied by 1% composition tax. In Andhra, I'll pay 5 lakhs multiplied by 1% composition tax. You're getting that? So that is state turnover. When you're making the payment, it is state turnover. When you're checking entry and exit, I'll add both Tamil Nadu and Andhra. For checking, can I enter, will I exit? When I'm checking my entry point and exit point, I'll not see Tamil Nadu separately, I'll not see Andhra separately. I'll club it. What is my pan India turnover in previous year? I'll not see Tamil Nadu separately, I'll not see Andhra separately. I'll come add both and see whether I'm within 150 lakhs, 75 lakhs, 50 lakhs. When I'm checking my exit, should I leave composition scheme? I'll not see Tamil Nadu separately, I'll not see Andhra separately. I'll see current year aggregate turnover together to see whether I have to exit or not. For entry and exit, I'll see aggregate turnover. I'll see Tamil Nadu and Andhra together. Tamil Nadu and Andhra together. But when I'm talking about payment, whether this payment is always on quarterly basis. So this will not be worked on yearly basis. This payment is always on. So that will be worked for 4 quarters, correct? 4 quarters of what? Current year. 4 quarters of what? So first, supposing in your current year, first quarter Tamil Nadu is 10 lakhs and first quarter Andhra is 5 lakhs. So in Tamil Nadu, you'll pay 10 lakhs multiplied by 1%, assuming that you're dealing only with goods, normal composition scheme. In Andhra, you'll pay 5 lakhs multiplied by 1%. Are we clear with this understanding? Are we guys clear with this understanding? Actually, if you see in composition scheme, you do use previous year aggregate turnover, current year aggregate turnover for checking the entry and the exit. Entry is based on previous year pan India turnover. Exit is based on current year pan India turnover. There you check 150 lakhs, 75 lakhs, 50 lakhs and decide whether you can enter and decide whether you have to exit. This is not one state, it is pan India aggregate turnover. You also use state turnover and you also use both previous year state turnover and previous year state turnover to find how much service you can have under normal composition scheme. Normal composition scheme, what is the point? Will you deal only with goods, restaurant, outdoor catering, or can you have even services? In normal composition scheme, your main element should be goods or restaurant, outdoor catering, but you'll have small portion of, what is that small portion of other services? You have to decide a limit, how much service you can have. When you have to decide a limit, you should have a formula. What is that formula? 10% of. So, in Tamil Nadu, I'll have one service limit. Supposing my previous year turnover in Tamil Nadu is 70 lakhs and in Andhra is 60 lakhs. Tamil Nadu it is 70 lakhs, in Andhra it is 60 lakhs. What is my pan India turnover? 130 lakhs. Assuming that I am dealing with the goods, it is within the limit of 150 lakhs. Within the limit of, what is my aggregate turnover in previous year? 70 plus 60 lakhs, 130 lakhs, which is within the limit of, why? I have selected Tamil Nadu and Andhra. I am dealing with goods. So what is my limit? Tamil Nadu, Andhra goods. Tamil Nadu, Andhra goods. Tamil Nadu, Andhra goods. 150 lakhs. Is that clear? Both are normal states, 150 lakhs. What is my previous year aggregate turnover? 75 lakhs, 70 lakhs and 60 lakhs, 130 lakhs. Am I within the limit? Can I enter composition scheme? When I am entering composition scheme, I will enter in Tamil Nadu as well as Andhra. Correct? Now let us only focus on service. How much service I can have within Tamil Nadu? 7 lakhs. Previous year state turnover 70 lakhs multiplied by 10%, 7 lakhs or 5 lakhs, whichever is higher. How much service I can have within Andhra? It is previous year state turnover 10%, which is 60 lakhs multiplied by 10% or 5 lakhs, whichever is. So that service limit will be different for Tamil Nadu state 7 lakhs and different for Andhra Pradesh, which is 6 lakhs. Are you getting that? Now, even there is a current year state turnover. What is the relevance of current year state turnover? See, finally, you have to make the payment of composition tax, correct? Now, we have discussed composition tax payment is quarterly or yearly. What was one of the advantages of composition scheme? Quarterly payment, yearly return. Quarterly, but this quarterly payment will be based on what? Current year state turnover. Current year, I will not pay together. If I am working in Tamil Nadu and Andhra, I will pay separately for Tamil Nadu, separately for Andhra. So it is not based on aggregate turnover, it is based on. So in a particular quarter, if my turnover in Tamil Nadu is 10 lakhs, and particular same quarter, turnover in Andhra is 5 lakhs, in Tamil Nadu I will pay how much? 10 lakhs multiplied by 1%. In Andhra I will pay 5 lakhs multiplied by 1%. You find all the types of turnover, but for different purposes. If you don't clarify or if you don't have clarity in your mind when it is what turnover, you'll mix everything. Then you don't know when to use previous year aggregate turnover, when to use current year aggregate turnover, when suddenly that is previous year state turnover, when suddenly that is current year quarterly state turnover, because you will pay 4 quarters, correct? Current year quarterly state turnover. Everything is for a different purpose. Everything is for a, and I'll make your life very simple. Whenever there is a concept, condition, you can do this or you cannot do that. Whether you can do this or not, it is always based on aggregate turnover, pan India turnover. And whenever there is a calculation, finding a number, it is always based on state turnover. I'm not talking about previous year, current year. It is always based on state turnover. Finding out the number, that this is a number, this is a limit. It is always based on. So late fees calculation will be based on state turnover. It is always based on. So whenever there is a number throughout GST, this is not only for this chapter, this is throughout GST. Whenever you're going to decide whether you can do this or you cannot do this, it is always based on aggregate pan India turnover. Whenever it is finding a number, this is the amount. It is always based on state turnover. It is always based on state turnover. Are you guys clear with these differences? Now one last difference, which is again very crucial. When you talk about when you talk about interest on loans, interest on loans, interest on loan is one of the exempt supply, correct? 0%. 0%. Interest on loan is counted. Aggregate turnover includes exempt supply. Exempt supply includes interest on loan. So interest on loan is counted in the limit of 40 lakhs, 20 lakhs and lakhs. You will count it. Sir, but we have seen something special about interest on loan 40 lakhs. Yes, what was the special point? Normally, goods plus service means you will not allow 40 lakhs in certain normal states. But if it is goods plus interest on loan, you can still enjoy 40 lakhs. But will you count interest on loan in that 40 lakhs? Yes. You will count it. Because aggregate turnover includes exempt supply. Exempt supply includes interest on loan. One of the exempt supply is interest on loan. But interest on loan, there is only one calculation which is not at all counted. Interest on loan, which is one of the exempt supply, will not be counted throughout your composition scheme. Treat it as not at all that. I'll give an example to see one point so that you have a clarity. Supposing I'm working in Tamil Nadu, right? Just the entry point. I'm dealing with goods and I have interest on loan. Goods plus interest on loan. Tamil Nadu goods, majorly goods means what is the limit? Tamil Nadu goods, what is the limit? Tamil Nadu, I'm talking about composition scheme. Tamil Nadu goods. Now, understand this. My previous year aggregate turnover is 165 lakhs. 165 lakhs. Out of which 145 lakhs is goods and 20 lakhs is interest on loan. I'm giving the breakup. 145 lakhs, goods and 20 lakhs. Now what to do? If I see on an outer basis, I'm not eligible for. Why? My previous year aggregate turnover is 165 lakhs. But in composition scheme, it is said that remove interest on loan. Don't even count interest on loan. So if I remove interest on loan, what is my previous year aggregate turnover? Louder. Can I enter composition scheme? And by the way, this is not only for entry. When I tell interest on loan is not at all counted, this is only an example. It is for entry, exit, inner limit, payment. I will not count interest on loan throughout composition scheme. I will not include in previous year aggregate turnover. I will not include in current year aggregate turnover for exit purposes. I will not include in previous year state turnover for finding the inner limit for services in normal composition scheme. I will not include in current year state turnover for payment purposes. I will not include interest on loan, and I say plays with it. It will give interest on loan, remove it. You remove it. You treat the question as if interest on loan is not that. You change the numbers accordingly. If the question is 165 lakhs including interest on loan 20 lakhs, you make it 145 lakhs. If the question is 145 lakhs goods, 20 lakhs interest on loan, you focus only on 145 lakhs. You remove interest on loan for all purposes, for not only for entry. Just because I have given an example of entry, don't only restrict to that. You remove interest on loan. Supposing my current year aggregate turnover is crossing 150 lakhs. But when I'm touching 150 lakhs, 135 lakhs is goods and 15 lakhs is interest. Did I cross 150 lakhs? No, I did not cross 150 lakhs because when I touch 150 lakhs, 135 lakhs is goods, 15 lakhs is remove it. Still I have balance 15 lakhs for goods. You remove it. You remove from all purposes. You remove it for entry purposes, that is previous year aggregate turnover, exit purposes, that is current year aggregate turnover, inner limit of services, which is based on previous year state turnover, and payment purposes, which is based on current year state turnover, but payment will be on quarterly basis. So you remove from everywhere. Now these are all points important for calculation. Actually, what we are doing is first we are seeing the calculation part of composition scheme. And we are done with the calculation part of composition scheme. So once you have a clarity, you'll never make a mistake. So yes, that is previous year aggregate turnover, current year aggregate turnover, previous year state turnover, current year state turnover. All the possible things which can be there are there within composition scheme, but all are having different purposes. Previous year aggregate turnover is the first thing that you'll check for entry. Can you go for it or not? Current year aggregate turnover is the last thing that you'll check, whether you are within composition scheme or you have to tell Tata bye bye to composition scheme. Previous year state turnover, you'll check somewhere in the beginning. After you enter, you will check how much service I can have, but that is allowed only when you're working in normal composition scheme. Current year state turnover, you'll keep checking every quarter because you have to make payment every quarter. You have to make payment every quarter. And this interest on loan, normally it is part of aggregate turnover. It is part of aggregate turnover. But for composition scheme, you will not count interest on loan. You will not even count interest on loan. You remove that from everywhere. You remove it from previous year aggregate turnover, entry purposes, current year aggregate turnover, exit purposes, previous year state turnover, limit for services in normal composition scheme, and current year state turnover relevant for quarterly payment. Remove from all the questions. If the question is giving you, say for example we have seen for entry and exit. I'll give one more example for payment. Current year state turnover, first quarter state, first quarter current year. Now I'm not talking about the entire current year, first quarter. In Tamil Nadu, there is a turnover of 2 lakhs. 10 lakhs goods, 2 lakhs interest. 10 lakhs goods and 2 lakhs interest on loan. You will pay composition tax how much? You will pay only 10 lakhs multiplied by, not that. You remove from everywhere. You remove from everywhere. Are you guys clear with this understanding? So this is very, very crucial, very, very important. Now, once you know all these things, believe me, ICAF never asks all such questions where it combines everything. But when it combines everything, if you don't know these points, you can never crack the question. Think of the toughest question that ICAF can ask. And if you don't have clarity with all these points, I bet not even 1 out of 100 students will get a right answer. Because you don't have clarity when to use what. But once you have a clarity, you are expecting ICAI to ask the toughest question. Yes, now you give multiple states. I know multiple states, how to work out. I have some clarity of when, what is relevant. You will go step by step. Because you have a clarity in your mind that there are 4 types of turnover. Previous year aggregate turnover, current year aggregate turnover, previous year state turnover and current year. And everything has a different objective. One is for entry, one is for exit, one is for inner limit of services, and one is for your payment purposes. So that clarity you'll have. Now, final thing which is required for your calculation, number purposes, calculation part of your composition scheme. One was your numbers. When is what limit, whether you will enter or not. One is the rate of tax. What are the types of rates of tax in your composition scheme? Normal composition scheme, special composition scheme. Now, in normal composition scheme, you talk about goods, you talk about restaurant, outdoor catering services. And in special composition scheme, I will not write services, I will write other cases. If you are not covered in normal composition scheme, because it can be services with goods also. Services being the major portion. Services being the major portion. Now, when you are dealing with goods, you can be a trader or you can be a manufacturer. Right. Now, what is the rate of tax that you are going to pay? For goods sector, till now, what was understanding? Louder. Goods sector, normal composition scheme. Goods sector, normal composition scheme. 1%, be it trader, be it manufacturer. Restaurant, outdoor catering sector. Special composition scheme. Clear? Clear? And when I tell goods, it can have other, so the same rate will apply. Correct? When I tell restaurant sector, you can have restaurant with other services, correct? But within the limit, correct? That other services will be within the limit. So if we are dealing with goods with minimum service, the rate is still 1%. If you are dealing with restaurant with minimum other services, the rate is still 5%. And when you talk about other cases, it can be services along with goods, but services being the major portion. The rate will be still 6%. The rate will be still 6% because people confuse. services means always 6%. No, it is not like that. It is not like that. Goods means always 1%. No, it is not like that. It is majorly service, but goods small portion you are working under special composition scheme. It is 6% for the entire turnover. You don't segregate that goods and services. It can be otherwise also. Goods with minimum small services within small limit, within the inner limit. It will be 1%. Restaurant outdoor catering with services within the limit. It will be 5%. Not only on restaurant but also on small services. If it is goods with services in small portion, 1% is not only on goods but also on the small portion of services. And it can be special composition scheme where you have services majorly, so small portion goods also. It will be 6%, not only on services but also on the small portion of. ICAI has never asked it in your study material or RTP or MTP or examination. That doesn't mean question cannot come. You can get all these questions. Then you will be confused which rate to apply. Clear? But one small change, when you talk about 1%, when you're talking about a trader, 1% is only on taxable supply. If it is exempt supply, you will not pay. If you're a manufacturer, 1% is on taxable supply plus exempt supply. If you are a restaurant outdoor catering sector, 1%, 5% on taxable supply plus exempt supply. If you are under service sector, 6% on taxable supply plus. So, trader for the purpose of only payment will pay only on taxable. Supposing, I will give a very simple example. In a current quarter, I am only dealing with goods. Assume that Tamil Nadu goods. So that mind is very clear, 150 lakhs. Tamil Nadu goods. When that is the scenario, in one quarter, payment means I'll talk about quarter. Payment means I'll talk about a quarter. I am having a turnover of 20 lakhs. How much? 15 lakhs taxable supply, 5 lakhs exempt supply. 15 lakhs taxable supply and 5 lakhs exempt supply. Now what will happen? So in a particular quarter, I have 15 lakhs taxable supply, 5 lakhs exempt supply. This is only for payment purposes. So therefore I'm writing quarter of which year? Quarter of current year or previous year? Quarter of current year. Now if at all I am a manufacturer and if I am a trader, what will be the difference? If I am a manufacturer, I will pay 20 lakhs multiplied by 1%. If I am a trader, I will pay 15 lakhs multiplied by 1%. The difference is, if I am a trader, I will pay only on taxable supply. You got that? And this benefit for a trader is only for the purpose of payment, not for entry and exit. Do not conclude that if you are a trader of goods, you will not count exempt supply. No, you will count exempt supply when it is previous year aggregate turnover, current year aggregate turnover for entry and exit purposes respectively. You will also count this exempt supply when it is finding out the inner service limit. 10% of previous year state turnover, 5 lakhs, whichever is higher. You will not count exempt supply only for the purpose of payment. So do not have a wrong assumption that trader you will not count exempt supply. Trader you will not count exempt supply only for the purposes of payment. Exempt supply will not be counted. Exempt supply will not be counted. Because understand that whether it is aggregate turnover or state turnover, both includes exempt supply. Both includes exempt supply. Both includes. So when this exempt supply is not being counted, please do focus. I can see you guys, right? When this exempt supply is not being counted, only for the purpose, limited purposes of payment, that too only for a trader. So don't have a wrong assumption that for trader, we will not count exempt supply throughout composition scheme. No, you count exempt supply throughout composition scheme. You check at the time of entry, aggregate turnover previous year, you count exempt supply. Aggregate turnover current year, exit, you count exempt supply. Inner limit for services, normal composition scheme, which is based on previous year state turnover, you count exempt supply. Only one place where you don't count exempt supply. See, there's a difference. People confuse this with interest on loan. Interest on loan is only one of the exam supply. Because if I don't tell this, your mind is still stuck at interest on loan. I do know it. From experience, I do know. Your mind is still stuck at, so we have already seen it. No. There are hundreds and hundreds of exam supply, out of which one of the exam supply is interest on loan. That interest on loan is not counted anywhere in composition scheme. And that is not counted anywhere in composition scheme for all the persons. Be it a trader, be it a manufacturer, be it a restaurant outdoor catering, or be it special composition scheme. Correct? So that is not counted anywhere in composition scheme for all the persons. We are not talking about interest on loan now. Because interest on loan is anyways not counted anywhere inside composition scheme for any person. Interest on loan not counted in composition scheme for all types of turnover, for all types of persons. For all types of turnover, for all types of persons. But that is only one small example of exam supply. Now we are not talking about interest on loan, we are talking about other exam supplies. I can be a trader within small shop, I have hundreds of items. Few items are at 5%, few are at 12, few are at 18, etc. We are talking about the other exam supplies. We are not even talking about interest on loan, is already discussed. We are talking about other exam supplies. Other exam supplies is not counted only for a trader, only for a trader. That too only for payment. That too only for, you look at this way. Interest on loan is also exam supply. Not counted for every type of persons throughout composition scheme, for every types of turnover, for every types of. But this exam supply, what we are discussing, is not counted only for a trader. That too only when you are calculating the payment. Calculating the payment. See, this extra caution in all these wordings is to remove your doubts from your mind and to make sure that when questions are asked, you don't mix and make a khichdi. Otherwise, for sure, if this is not being said, you will make a khichdi out of it and you don't know when to use what. What we have done is make sure that, yes, there is a khichdi which is in front of you. You know what all ingredients are there at what point of time. So that clarity you do have. So what are the rates? Now it's very clear. What are the rates is now very clear. So right from the beginning, we are discussing 1, 5, 6. Correct? Now you clearly know when it is 1, when it is 5, when it is 6. The why to differentiate trader and manufacturer? Two reasons. Actually, the rate for a manufacturer, the highest rate possible for a manufacturer is, but as of now, notified rate is, for a trader it is 1. For a manufacturer it is 2% maximum rate, but notified rate is first difference. Second difference. For a trader it is 1% only on taxable supply. But for a manufacturer it is 1% on taxable plus exempt supply. Throughout your GST law, you don't differentiate a trader and a manufacturer. The only place where you differentiate trader and manufacturer is composition scheme. And there are two differences. What are the two differences? One is rate. Trader is simple one. Manufacturer is maximum 2, notified is 1. For your exam, it is 1. Trader will pay 1% on taxable supply only, not on exempt supply. Manufacturer will pay 1% on, which you have understood with this example. That is everything about your calculation part. Everything about your calculation part. There's one more area where you will focus on manufacturer trader, that we'll see. So there are two differences which you have seen. One more difference we'll be seeing now. Now everything about your composition scheme, the entire calculation part. If I were to put a tick mark for what all we have discussed, this entire last page, all the complicated portions we have completed. We have discussed this initial page, we have completed. The second page of this chapter, major portion. Small theoretical portion, conceptual portion is left out. That small portion we are trying to focus on. That small area is left out. Now what is that small area? Other conditions. What is the condition for you to enter composition scheme? Previous year conditions, current year restrictions. Tell me what all you have discussed with previous year conditions and current year restrictions. Previous year conditions and current year restrictions. if you want to enter inside composition scheme, your previous year aggregate turnover should be up to 150 lakhs, 75 lakhs, 50 lakhs. Current year restriction, your current year aggregate turnover should be up to 150 lakhs, 75 lakhs, 50 lakhs. Otherwise, you will exit. Otherwise, you will exit. Previous year is all for about entry. Current year is all about exit. So rather, if I'm writing exit, I'll write in positive language. If it crosses 150 lakhs, 75 lakhs, 50 lakhs, you will exit. You will exit. Right. Now, in previous year, there is only one more aspect which is to be touched. That in your previous year, you should not manufacture notified goods. You should not manufacture notified goods. And what are the notified goods? Pan masala, tobacco, ice cream, building materials. One more extra point, aerated water. So here there is an extra point which is coming. Aerated water. So this items we have already seen elsewhere. This item we have already seen elsewhere. 40 lakhs. If you're dealing with pan masala, tobacco, ice cream, building material, you cannot go for. You can go for 20 lakhs, 10 lakhs, but you cannot go for. But here, you cannot even enter composition scheme. There's one more difference. One, there aerated water was not there. Here there is aerated water. There's one more difference. Here, there they were talking about trader as well as manufacturer. Here they are only talking about manufacturer. Here they are only talking about. So two differences. One difference, here the focus is only on manufacturer. There it was on trader as well as manufacturer. Second, here they include even aerated water. There aerated water was not there. If I were to explain more very clearly, if at all you are talking about pan masala, tobacco, ice cream, building materials, and if you are talking about aerated water, and if you are talking about other goods, and if I am telling that you are a trader, and if I am telling that you are a manufacturer, if I am trader of pan masala, tobacco, ice cream, building materials, can I think of 40 lakhs? I cannot think of 40 lakhs. This is for registration. I can think of 20 lakhs. But can I enter composition scheme? Yes. This is with respect to composition scheme. If I am manufacturer of pan masala, tobacco, ice cream, building materials, can I think of 40 lakhs? No. Can I think of composition scheme? If I am trader of aerated water, can I think of 40 lakhs? Yes. If I am trader of aerated water, can I think of composition scheme? Yes. If I am manufacturer of aerated water, can I think of 40 lakhs? Aerated water was not at all there in the list. Yes. If I am manufacturer of aerated water, can I think of composition scheme? No. For all other goods, whether I am a trader or manufacturer, I can think of 40 lakhs for registration. I can go for composition scheme. So this tells you the minute differences which are there in different places. If I am trader of pan masala, tobacco, ice cream, building material, or if I am manufacturer, I cannot think of 40 lakhs. Correct? In all other cases, I can think of 40 lakhs. Correct? Let us understand this simple way. If I am dealing with pan masala, tobacco, ice cream, building material, whether a trader or a manufacturer, I cannot think of. In all other cases, I can think of 40 lakhs. If I am manufacturing pan masala, tobacco, ice cream, building materials, or aerated water, I cannot think of composition scheme. I cannot think of. Only I am manufacturing pan masala, tobacco, ice cream, building material, or aerated water, I cannot think of composition scheme. Only for a manufacturer, all these items. In all other cases, I can think of composition scheme. In all other cases, I can think of composition scheme. Now, there is a current year restriction also in this case, that in current year, if I manufacture notified goods, pan masala, tobacco, ice cream, building materials and aerated water, I'll be thrown outside. Exit. I have to exit composition scheme. So this is there in previous year for entry. For entry, I should not manufacture. Exit means if I manufacture, I'll exit. If I don't manufacture, I'll not exit. Clear? So previous year entry points are only 2. For entry, I have to check only 2 things. Whether my previous year aggregate turnover was up to 150 lakhs, 75 lakhs, 50 lakhs. Whether in previous year I was not manufacturing notified goods. If that is there, I can enter. Current year exit points are many. In current year, there is one more exit point that we have discussed. In current year, my service limit crosses the inner limit. What is the inner limit? 10% of previous year state turnover or 5 lakhs, whichever is. So that is one more point. So this is, I'll write it as 1A, 1B based on numbers. 1A, 1B based on number. I have to check 2 things. In current year, my aggregate turnover should not cross 150 lakhs, 75 lakhs, 50 lakhs. Plus, in current year, my service limit should not cross inner limit. 10% of previous year state turnover of 5 lakhs, whichever is higher. And this point is relevant only and only for, all other points are relevant for normal and special, but this point is relevant only for normal composition scheme. Now there are other conditions because this inner service limit is only there for normal composition scheme. So this point is relevant only for normal comp. All other points are applicable both for normal composition scheme and there's no difference. All other points are applicable equally for normal composition scheme and why this point is applicable only for normal composition scheme? Because inner limit of services there only in normal composition scheme. Goods plus small services. Restaurant outdoor catering plus small services. It is relevant only for normal composition scheme. Now other important areas that if at all I am CTP, NRTP, special persons, casual taxable person, non-resident taxable person in current year, go outside. If I am taking a temporary registration in terms of casual taxable person or NRTP, go outside composition scheme. Or if at all I am dealing with non-taxable supply, which means I am dealing with alcoholic liquor for human consumption or 5 notified petroleum products, go outside composition scheme. Or if I am making interstate outward supply, interstate, one state to another state, outward supply. Inward supply is allowed, outward supply is not allowed. Go outside composition scheme. Or if at all I'm supplying, here it is only services. Previously goods was there, but now it is only services. If I'm supplying services through electronic commerce operator, ECO, electronic commerce online platforms where TCS is applicable, go outside composition scheme. Can I supply goods to ECO where TCS is applicable? Yes. Can I supply services where TCS is applicable? No. If I supply goods through ECO where TCS is applicable, I can be inside composition scheme. If I supply services through online platforms, electronic commerce operator where TCS is applicable, I cannot be inside composition scheme. There's a difference. All these things I have to take care. Now people actually get confused, and I say is actually given that confusion in one example. They gave the previous year turnover. They gave the previous year aggregate turnover to calculate it. Supposing they gave that you are there in Maharashtra dealing with goods. In the turnover, they gave that you are dealing with alcoholic liquor. You're dealing with Alcoholic. They gave a turnover of alcoholic liquor for human consumption. In the previous year aggregate turnover, they gave that you are also having interstate outward supply. Interstate outward supply. Interstate. So when you calculated the turnover, which includes alcoholic liquor for human consumption, non-taxable supply, which includes interstate outward supply, you found that the turnover is 140 lakhs. You found that the turnover is 140 lakhs. So what was the question all about? The question was all about you're there in Maharashtra, you're dealing with goods, and they are trying to ask you to find out previous year aggregate turnover. In that previous year aggregate turnover, one of the line item they gave alcoholic liquor for, and one of the line item they said that you are having interstate outward supply. So out of other turnover, these were there. When you made a total of all the turnover, including these items, your turnover came to 140 lakhs. Your turnover came to, can you enter inside composition scheme? Louder. Can you enter inside composition scheme? Can you enter inside composition scheme? Louder. That's the exact mistake that ICAI wanted you to do. That's the exact mistake that ICAI wanted you to do. What is your previous year aggregate turnover? Including all these items, what is your previous year aggregate turnover? And what is your limit if you're there in Maharashtra dealing with goods? Is it less than this limit? Correct? Can you enter inside composition scheme? I was showing you the mistake. I thought you will not make that mistake. But thank God that you made that mistake, because I wanted you to convey this point. What is relevant in previous year? Your previous year aggregate turnover should be up to 150 lakhs, 75 lakhs, 50 lakhs. Plus previous year you should not be manufacturing. Your entry point are only two conditions. Sir, no sir. In the turnover you said that you are also dealing with. In the turnover you also said that you are also dealing with. You are also having. Let it be. That was in previous year. That was in. If you are entering composition scheme in current year, make sure that you don't deal with alcoholic liquor for human consumption. Make sure that you don't make interstate output supply. The question was very simple. The question was checking the criteria of, the question was actually given in a more intelligent way. They did not mention previous year. They mentioned say financial year 24-25. And they asked about, are you eligible for composition scheme in financial year 25-26? So obviously that 24-25 means, so at least now I am giving you all the hints that it is previous year. If you read the question, you will never even find that it is previous year. Because finally they tell that, are you eligible in 25-26, which means 24-25 is. And you committed the mistake that I was trying to tell from my Atma, that don't commit this mistake. Do not commit this mistake. Because previous year, what is relevant? Only two simple points. You don't check anything in previous year except 2 points. Supposing I'll tell in a different way. Previous year I was CTP, NRTP. Is it relevant? No. Current year I should not be. Previous year I was supplying services through ECO where TCS is applicable. Is it relevant? No. Current year I should not be supplying services through ECO where TCS is applicable. Where TCS is applicable. Are we guys clear with this understanding? Are we guys clear with this understanding? So there's a difference between previous year entry. When I wrote that heading, might be many of you did not understand the significance. Previous year is all about entry conditions and current year is all about restrictions. If in current year you do any of these things, you will be outside composition scheme. So current year, if you want to be inside composition scheme, your aggregate turnover should not cross 150 lakhs, 95 lakhs, 50 lakhs. Your service limit in normal composition scheme should not cross 5 lakhs of previous year state turnover, whichever is higher. You should not be manufacturing notified goods. You should not start manufacturing notified goods. Already you are not manufacturing notified goods in previous year, only then you are entering. You should not start manufacturing notified goods in current year. You should not be CTP, NRTP. You should not start dealing with non-taxable supply. You should not start making Interstate outward supply. Can you have interstate inward supply? Can you purchase from other states or outside India? Can you import? Yes. Can you purchase from other state? Yes. Can you sell to other state? No. Can you export? No. You should not supply services through ECO where TCS is applicable. You should not do all these things in current year. If you start doing it, you are thrown outside composition scheme same time. So normally people think that I'll be thrown outside composition scheme only when I touch 150 lakhs, 75 lakhs, 50 lakhs. No. There are so many reasons why you will be thrown outside composition scheme. Even before touching 150 lakhs, 75 lakhs and 50 lakhs. Are we guys clear with this understanding? Are we guys clear with this understanding? So this is all about your entry points and your exit points. Entry points and your exit points when you talk about your composition scheme. One or two simple concepts. If I'm thrown outside composition scheme in one state, can I be in composition scheme in other state? No. In one state, I cannot be in composition scheme. Other state, I cannot be in regular scheme. In all the states, I have to be under. Either in all the states, I have to be under composition scheme, or in all the states, I have to be under. That indirectly means that if I'm violating a condition in one state, supposing I'm working in 5 states, my manager in Maharashtra wrongfully started making interstate outward supply. Out of 5 states, 1 state is Maharashtra. That Maharashtra manager, for some reason, he made interstate. Am I removed only from Maharashtra or I am removed from all the states? I am removed from composition scheme in all the states. Why? One state, composition scheme. Other states, regular scheme. Not possible. Either in all the 5 states be under regular scheme, or in all the 5 states be under. What is the significance of this? If I am violating the condition in one state, I am thrown outside composition scheme from all the states. From all the states. Are you guys? Yes, please. Whether turnover is pan India or state wise. When you're talking about turnover, is it pan India or state wise? Right. So when you're talking about turnover, will you see exit turnover, whether it is pan India aggregate turnover or state wise aggregate turnover 150 lakhs, 75 lakhs, 50 lakhs. So your point is ruled out there itself because you have to see pan India. You have to see pan India. This point will be relevant if in one state I am crossing the service limit, not service limit, 10% of previous year state turnover or 5 lakhs. I am violating that service limit in, I'll be thrown outside. So understand, except for this point, which is seen pan India, which means if you are violating it, you are violating automatically in all the states. All the other conditions starting from 1B, 2, 3, 4, 5, 6, which you may violate only in, but you are thrown outside in. But this first 1A condition is not seen state wise. It is seen automatically. So automatically all the states is the answer. Automatically all the states is the answer. Right. So this is all about your entry and exit. And one again special point, if you're under composition scheme, should you pay RCM? Yes. Just because you're under composition scheme, you cannot tell that I'll not pay RCM. You will not tell that I'll not pay RCM. Even if you're under composition scheme, you're required to pay RCM. You're required to pay. Point number 1. Even if you're under composition scheme, you're required to pay. And when you pay RCM, it is not 1, 5, 6%. It is normal rate. 5, 12, 18 and all. Because it is not outward supply, it is inward supply. It is inward supply. Right. And in composition scheme, always you'll have what tax? CGST, SGST or IGST or combination of both? You can never have combination of both. Why? You can never have interstate outward supply, which means you'll always have CGST. So when I tell 1%, 5%, 6%, in exam you have to write 0.5, CGST 0.5, that state SGST. 5%, 2.5, CGST 2.5, that state SGST. 6%, 3%, CGST 3%, that state SGST. You can never ever have. You can never ever have. What is in current year? You can have only what? Intrastate. Can you make sales to other state? No. Can you make export? So what is the significance? You will have only sale within the. Can you purchase from other state? Yes. On your purchase, you can have IGST. Can you import from outside India? Yes. But sale portion will be only within the state. Purchase can be within the state, outside India. But sale should be only within the state. You will always have CGST and SGST. You will always have CGST and SGST. But when you talk about RCM, is it your purchase or sale? So in RCM, there are three important points that you would understand. Even if you're under composition scheme, you can have RCM. When it is RCM, it can be CGST, SGST, or it can be IGST, depending on from where you're getting. Second, the rate will not be 156, the rate will be normal rate, 5% or 12% or 18% or 28%, because it is your inward supply. And third thing, normally when you talk about RCM, you pay by one hand, cash ledger, you get the credit in, other hand, credit ledger. You pay by one hand, cash ledger, you get the credit in, other hand, credit ledger. But for composition scheme, you pay by one hand, cash ledger, you don't get the credit. Why? In composition scheme, you will not get any credit. You will not get any credit. Right. So that completes all the minute aspects of your composition scheme. You beat your entry point or beat your exit point. That is all about the number area. First, what we saw was number area. Number area. We only saw the numbers when it is 150, 75, 50 lakhs, etc., etc., etc. Or we only saw the number of 1%, 5%, 6%. Then we brought other conceptual points and telling that you cannot do all these things. And when we brought it, it was very clearly said, be very careful. Previous year entry is only two conditions. Rest all the points. This current year, exit. Current year, exit. Which means you are already inside composition scheme. And if you do them, you will exit. If you do them, you will exit. 2 based with numbers and 5 based on action. 5 based on 2 based on numbers and 5 based on action. Based on what you're doing. Based on what you are doing. You will be going outside composition scheme. When you talk about your entry and exit, very, very simple points. Can you enter inside composition scheme just like that? No, entry and exit. One is entry, one is exit. If you're taking new registration, you can enter composition scheme at any point of time at the time of application, which can be in between the year. Effective date will be effective date of registration, which can be in between the year. You're applying for registration randomly in the month of September. In September, when you're filing registration form, REG 01, you select composition scheme. But if you're already registered, you're shifting from composition scheme to regular scheme. You're shifting from composition scheme to regular scheme. You cannot come inside composition scheme at any point of time. You can enter inside composition scheme only from 1st of April of next financial year, for which you have to give an intimation. Before 31st of March of previous financial year. Before 31st of March of previous financial year. If I am taking new registration, can I enter composition scheme in between a year? Yes. At the time of filing registration form, select composition scheme. But if I am already registered under regular scheme, can I switch over to composition scheme? At any point of time, no. I can switch over only from where? Only from 1st of April of next financial year, for which I have to give intimation before the commencement of next financial year, which means before 31st March. Before, when I will enter composition scheme, 1st April of next financial year, I have to give intimation before 31st March. But please understand, this intimation is not required when you are already under composition scheme. If I am already under composition scheme, next year I want to continue for composition scheme, by default I will be inside. When it is required, when I am switching over from regular scheme to composition scheme. That is all about entry. Now what about exit? Can I exit composition scheme in between a year? Yes. Exit in between a year is allowed. Exit in between a year is, entry in between a year normally is not allowed except for new registration. But exit in between a year is, I am working inside composition scheme. I don't want composition scheme to be there. Can I go outside? Yes. There are two possible reasons. One, I'm not satisfying the reasons. I violate the conditions. I start dealing with non-taxable supply. I start making interstate outward supply. I start supplying services through EcoVat T6 is applicable, etc., etc. I cross the limit of 150 lakhs, 75 lakhs, 50 lakhs. My service limit crosses the inner limit, etc., etc. All these points. I start manufacturing notified goods. I will go outside composition scheme. I have to give intimation within 7 days. Even if I don't give intimation within 7 days, I'm outside. The 7 days is no more significant. They request me to give intimation within, even if I don't give intimation within 7 days, I'm outside. I'm technically outside. Second, I am eligible for composition scheme, but I don't like composition scheme. I find it disadvantageous. I cannot take credit. So I think that no, this is waste of time. I'll go to regular scheme. What are the two different points? One is forceful exit. I want composition scheme, but I'm violating the conditions. Second is, it's not forceful exit, voluntary exit, which means I can continue inside composition scheme, but I don't like composition scheme. I'm going outside. I'm going outside. So these are the exit points. And these exit points are by assessee, registered person. But understand, you can be thrown outside composition scheme by officer. So when this will happen? When you are required to go outside. You are violating the conditions, you are required to go outside. You have to give intimation within 7 days, but you are not doing it. But you are not. What proper officer will do? Proper officer will give you show cause notice telling that either you are not at all eligible for composition scheme or you have contravened the provisions of, either you are not at all eligible, entry itself is not allowed, or entry was allowed but you had to exit but you did not exit. He will give you a notice. You have to reply to that notice within 15 days. After your reply, proper officer will decide within 30 days. What he will decide? Either he will accept your reply, which means he is satisfied that you can remain under composition scheme. Nothing will happen. Nothing will happen. Or he will throw you outside composition scheme from retrospective effect. From retrospective effect. And that is the reason I said, whether if you are not eligible and if you are not giving intimation within 7 days or not, it's not at all relevant, because you will be thrown outside retrospectively. If entry itself was not allowed, you will be thrown outside from 1st of April of that year. If entry was allowed, you should have exited on say 11th November. So and supposing we are after 2 years. So retrospective effect will be there from 11th November of 2 years ago. Of 11th November. Retrospectively will be thrown outside. Supposing you are into 2024-25. You are going for composition scheme in 22-23. 22-23. If entry was not allowed, officer will throw you outside composition scheme from 1st April 2022. If entry was allowed in financial year 22-23, but you violated the condition on 11th November 2022. Standing in 2024-25, officer will throw you outside from 11th November 2022. And it has got great repercussions. Why? If you are thrown outside, you would have paid composition tax 1%, 5%, 6%. But now you have to pay differential regular tax. Supposing the rate of tax is 18% and you have paid 1%. Now you have to pay differential. Wait, doesn't stop here. Plus interest. Plus wait, doesn't stop here. Plus penalty. Believe me, that businessman has to close down his business. If you try to put numbers, you'll find that he would not have earned that much of profit. His capital would not have been so much. He has to pay entire amount from his pocket. He cannot even collect from the customer. The differential tax plus interest plus penalty, everything he has to pay from his pocket. So it is very crucial when you're talking about entry and exit of composition scheme. And believe me, we are talking about whom? Small businessmen or big businessmen? Their profits and all will be very minimum. They will be gone. If these amounts are being collected with interest and penalty, they'll be literally gone. They will tell that I don't have even that amount in my bank and cash. Even if I sell my property, I'll not be able to pay that amount. Are you guys clear with this understanding? retrospective removal will be there. And when you're removed, you're not removed only from one state, you're removed from all the states. And please understand that when you're entering and exiting, entering specifically, I'm not talking about new registration, I'm talking about regular scheme to composition scheme. Regular scheme, new registration, no issues. Exiting, it is composition scheme to regular scheme. If you're going from regular scheme to composition scheme, you would have taken ITC, but now you cannot take ITC. You have to reverse ITC on the stock. When you are exiting composition scheme to regular scheme, you did not take ITC, but now you are eligible for taking ITC. You will be availing ITC on the stock. This is discussed in your ITC chapter. This is discussed in your ITC chapter. Regular scheme to composition scheme, you took ITC, you are not eligible for ITC now. Whatever ITC you took on stock, reverse it. Composition scheme to regular scheme, you did not take ITC, but now you are eligible for taking ITC. You'll have some stock on the conversion date. Whatever stock you have, now you can avail the ITC. Now you can avail the ITC. That calculation part is all touched in your ITC chapter. So that's all about your entry and exit. Entry and forget about new registration. Normally entry is not allowed in between the year. Only from 1st April of new financial year. That to give intimation before 31st of March of the previous financial year. Right. And when you're continuing inside composition scheme, no intimation. Exit, it can happen anytime. In between the year, you can go out. Entry is defined, but exit, you can go outside at any point of time. If you don't go outside, don't worry. Officer will take care of it. If you have to go outside, but if you don't go outside, officer will take care. When officer takes care of it, the repercussions are very high. Differential tax plus interest plus penalty will be very high. The entire profits that the businessman has earned throughout the years will go away. So better is, if you are violating the condition, you yourself go outside, there will be no repercussions. But if you are thrown outside by the officer, the repercussions are very high, because when he throws out, he will be throwing out retrospectively. He will be throwing out with past date effect. So the repercussions will be very, very high. So that's all about your entry and exit of your composition scheme.